All right, we are live. Can everyone hear us?
Good morning.
Morning. How we doing?
I'm look at that. Look
Happy
look at my
Monday.
I got look at my Christmas tree in the background. Ooh, look at that.
Ooh.
Hey.
But
Actually,
we
I
put ours up
forgot.
last weekend as well. Yeah.
Yeah, not that it.
I don't
I
have
need
one.
to check. No, well, you live alone, don't you?
Yeah.
So
I mean,
you can have a smaller
I
one.
I did have one, but it got like destroyed. It got it was
Oh,
left
your
outside
cat.
when we had one of the storms. Yeah, and it was
Oh yeah, of course,
mangled.
of course.
Yeah.
I bought one of those. Stands where you actually put the tree in, right? And man, like for all of these years, I've had these old school ones where you have to screw a bunch of things, and it takes forever, right? So I was, we bought the tree, and then I went in and I saw they had these stands, and it's not too expensive, like $50-$60 or something like that. And then all I did is put the tree in, push like a button, and then it's just all perfect. And then you water it. Amazing, amazing stuff.
You
I
water it?
think that,
Yeah.
yeah, of
Do
course,
you have
man.
an
Do you know how
actual
much?
tree?
Yeah, this is actually a real one. Look at
Right.
that.
Of
Look at
course,
that.
it's a real
Actual
one.
real one.
And like Jonatan says, you put like water in the stand so the tree actually
Yeah,
survives until
dude, it drinks like
3
it drinks like a liter, like one or 2 liters in the first day. It's
a.m.
crazy.
God damn.
Yeah, yeah,
Yeah,
yeah.
I don't
You know
know.
what I did
We never
last
have
year?
those. Like, I guess if we had real trees, they'd just die here in the heat in summer anyway. So it's
Well,
probably the main
Yeah,
reason why we don't have them.
you can have like Christmas palm trees,
yeah.
maybe.
Yeah. Need like a
Nice.
eucalyptus tree or something, something
Yeah.
strange.
And
Last
decorate it
year,
with koalas.
Yeah.
like when I like first like maybe 6-7 years ago, we used to go out and chop down our own tree, which is completely 100% legal. Don't worry, guys. And but then I started making some more money, and I thought, let's buy a tree, right? So we bought our first tree, and it's like we looked at the absolute best one, right? And I think it's fairly expensive, like $80 or something like that, right? And I forgot to water it, so it died. So on Christmas Eve, we had a dying tree, and it's just becoming brown and everything. So sucks. Anyway, we have something really cool happening next week. Is it next week? Yes, this is next week on the 22nd. We have a really cool event going on, and we have a link in the description of today's live stream. So make sure you go there and sign up. It's a 2026 trading prep live stream where we have gathered professionals within the trading space from both Trader Pool and the Fivers. We can have the CEO of Trader Pool and the CEO of the Fivers, and professionals within these both companies coming on, having trading sessions, and giving you the tools and knowledge you need to set up a proper plan for 2026. And there's going to be a lot of surprises. I'm not sure I can give you all the details, but a lot of good stuff. A lot of good stuff. So make sure you go in, check that link, and sign up for that. For that event. We're sharing my screen here, so let me actually pull up TradingView. What are we looking at here? I want to bring up this chart. Like, there's no. I don't think we need to. I don't need to add anything else than just look at this. Look at gold. What's happening? This is
The
gold.
same like every week. No, what we're talking
Yeah,
about.
it's just amazing, isn't it? Like, I remember, from we had this move to the downside, and people kind of stopped talking about gold. Like, gold wasn't really super interesting anymore, and then we had this range, and that range felt like forever, right? But then
Mm.
you look at the daily again, it's like, all right, well, we're back, bullish market, everything's bullish, uh about to hit that all-time high. I feel good, I'm in this trade, making money, feels nice, and looking back at this, it's just it's just crazy the momentum that gold had, because I remember when we had the top and we were thinking like, well, can we go back down here? Yes, it's very possible. We have an extended move to downside, and then it's like, I remember saying, well, it does make sense to have a low here. If we look at the way that gold have reacted to the fibs in the past, right? It makes sense to have a higher low here. But do I think it's going to happen? No, I don't think it's going to happen because it's too perfect. And then that's exactly what happens. I think you muted LJ.
I am
Right.
too. It was very dependent on all the other bits and pieces we had going on at the same time, though, right? We had a bunch of moving parts, which definitely could have changed things one way or the other. The shutdown. Are we getting the December cut? Yes, we are, 100%. Then no, we're not. Then we're back. Then
Yeah.
we got this, that. Like there was a bunch of moving parts. So I think it was fair to be, skeptical as to that.
Definitely.
I think it's been a number of times. Same with the dollar. The direction for euro dollar, direction for stocks, that kind of stuff. You can very easily build out both paths with completely reasonable rationality that are not necessarily in conflict. It just literally depends if we get this heads or we get tails. And they were both very 50-50. The same problem that the Fed has right now between inflation and the jobs market and that sort of thing. They are also stuck in that very 50-50 split between the push and pull sort of tug. So
Yeah.
yeah, I think
Before
what
we
has partly helped that is part of the expansion of the repos, right? Liquidity. That the stuff I was talking about a while ago.
Yeah.
That yes, they would have to pump this out. Obviously, the big portion that we got from the Fed meeting was that they were doing that much sooner and at a much greater rate, right? So that was definitely even more than I expected. I was looking for it, but
so
much more than expected.
we don't have quantitative easing just yet, but it does look like the stage is setting up for that to happen. At least behind the scenes, maybe unofficially.
Yeah, it's like a
It, it,
soft
it
version.
Yeah.
Yeah, it does feel like the Fed is, and this is something we've talked about a lot ever since I started following, Darius Dale from 42 Macro, and how he talks about the um, foreturning idea, and how it seems like the Fed is now kind of restructuring their focus on looking at helping the government focusing on the growth of the economy instead of mainly taming inflation, and with that maybe looking at not religiously looking at 2% target for inflation, but looking at more of a buffer zone around 2% with a little bit closer to 3%, and that gives a little bit more room for the government to increase its spending and grow its way out of the issues that we have right now. And it kind of seems like the Fed has, we've seen some comments from Fed officials speaking in that type of language. It's nothing official, and I don't think we're going to get something official. But then we have the new, potentially getting the new Fed chair. You might actually have more of that perspective.
Yeah,
So
it's hard
we,
because with the Fed chair, it looks like right now it's going to be Kevin Hassett or Kevin Walsh, right? Now the thing with Kevin Walsh, he is actually traditionally not a fan of QE and all of that kind of stimulus, right? So potentially, if you get Kevin Walsh coming in instead of Hassett, that also could have its own implications in that he won't be so trigger happy to turn on the spigots whenever it calls for it and early and ahead of time. So with that, you could actually see more of a bullish run to the dollar as far as less overall liquidity and M2 being pumped out in the totality of things. Now, where that leaves the rates picture in that perspective as well is also difficult to forecast between the debt profile keeping the economy stable, growth continuing. Because at the moment we are still very much we had the GFC and we're still stuck in that regime of needing to do that stuff just because of how everything is come to. That's sort of the status quo of how things work now. So
I'm a little bit worried about the idea that we've talked a lot about the affordability crisis, right? That's something that we hear quite a lot in the media, and that's something that normal people are thinking about because it's a big thing. If you look at inflation now, I'm not sure if you guys saw the clip. We had a financial reporter on, maybe it was Bloomberg or something like that, but he was basically saying, like, showing a graph of inflation from before COVID, before the pandemic till now, and then because all you hear about in the media is the inflation going up like 2%, and people are like, oh, inflation is only up 2%. That's nothing, but that's month to month sometimes. So if you look at the bigger picture, he's like, well, this small section here, this is the inflation number that we're seeing in the news. But if you actually go back, you see that inflation is up like 30%, right? And that's the real affordability crisis. Now, what I'm thinking here is when the Fed is pivoting more to a dovish stand, which is quite obvious from Powell's press conference as well, that he really reinforced that dovish tilt from the Fed, which means they're now, in the words of analysts, prioritizing Wall Street instead of Main Street affordability crisis. Because I do fear that this will not lead to taming inflation and reversing inflation, which is going to cause more issues with the affordability crisis.
isn't
Is
Um,
would that
isn't
would that also be based on, though? Because the affordability crisis is basically that we had inflation, now prices stick here. So the trouble is they go up and they never come down, right? That's the trouble. But surely to say that, though, you have to imply that, I guess, so the opposite of that would be either holding rates, having a tighter financial system, or potentially increasing rates. Would that necessarily expand or lessen the financial difficulties of those people having a hard time? I don't think so. It's only still going to increase those aspects. I think that's the trouble,
and
which I think
when
is why they've lent on the, like, we need to grow more and grow out of it, and hopefully wages come up. That's the only way that you can catch up with that affordability crisis, is by wages also.
Yeah, but that's not going to happen, no? I mean, this
Yeah,
is basically circling back to the theory of
yeah,
trickle down economies since mid '80s, since Ronald Reagan, no, where the theory was, okay, if the very wealthy in an economy, if the companies are doing better, it's going to trickle down, and automatically the normal simple worker is going to have more money by the end of the month at his disposal as well, which has been disproven. No, I mean, middle class and like real purchasing power of wages have been deteriorating. Not only the USA, it's also, I think, in Europe. Not so sure about Asia, but probably the same there. So that's called worldwide. For sure, in Australia is something as well.
yeah,
And so the whole picture of us being confronted with a new reality when it comes to Fed policies of saying, oh, well, we are not looking at 2% inflation anymore. We are now looking at 3%. I mean, that's just as justification to say, like, we can continue with quantitative easing, no? Because if
yeah,
we see then 2.5% inflation, oh, we are under our target. We have a justification to lower interest rates, because we
yeah,
don't want deflation by the end of the day. And it fits so well in everything that Donald Trump, maybe not himself, but at least the people in the background and the administration have been planning ahead to. I don't think we will ever see under Donald Trump somebody becoming the head of the Fed that is not pro lowering interest rates and that is not pro quantitative easing. I just cannot believe that. And
yeah,
it's like what we've seen since the '80s and what we have been seeing in an accelerating rate, meaning more and more debt, lower interest rates, so we can somehow afford the debt at a level still fought in records because GDP
Yeah.
to debt ratio has been where are we now in the USA, 125, 130, or maybe above that already. I'm not so sure right now. But it's like the next necessary step that you have to do if you don't want to change the underlying system, which would be to really look deeply where, for example, the governments can save money. We saw a failed attempt with what Elon Musk did there, and the other side of the medal is we need to have more tax income. Well, we cannot take it from the corporation because we are true believers in trickle down economy. So where do we have to take it from? It's from the working class again. That's going to suffer. And by the way, it's the same in Europe. We see that now as well. In Germany, there was like big on the news. Oh, the government, under Friedrich Merz, they have decided that for your way from your home to your work, you will get more money now, like a deductible, which before was like 25 cents per kilometer. Now it's like 30 euro cents per kilometer. But at the same time, you hear like, oh, but health insurance going to go up by 2, 3, 4, or 5%. So it's like you are net poorer, and this is what we see happening over and over again. Now, ironically, of course, like short-term, mid-term, maybe even long-term, that's a good thing for the stock markets, for risk-on assets, of course, because it drives liquidity into the markets. But I think we can all agree that, like long-term, we don't know where's this going to end. But I'm not saying like everything is going to crash, because I had the same discussion 25 years ago already. And as long as liquidity is there, as long as the belief in currency stability, especially towards the US dollar, is there, the system is not going to crash. But it's so ironic, so cynical for me that we, here like, or that we have to talk about things that are obviously wrong long term, and still we are forced to play by the rules as traders, and play those bets.
And so exactly. So like you were saying with that, like you can't really increase the taxes on companies because, as well, most companies they're pretty mature, the bulk of them now, right? We've only got kind of these big tech players that are really growing properly. So if you did start to tax them, you just deduct that of what is going to come off their earnings, that kind of stuff, what they can continue to do, blah, blah, blah. That hits GDP, and now you actually are technically in a recession by virtue of taxing. And then, so yes, you come back to the thing of dropping rates whilst accepting higher inflation, right? If you have debt, if you drop rates, obviously you got to pay less interest on the debt, so less expensive.
That's
if
what
you
you
also
need.
have inflation running slightly higher and you accept that, you're inflating your way out of the debt, right? So if you get those two things going on, that seems to be what they're going for, because either you got to pay your way out, which means GDP has to go massively up, or you tax, because those are the only two ways government gets money, or somehow you bring down artificially yourself the interest that you have to pay, and you allow inflation to expand at a higher rate.
And historically, there's, at least to my knowledge, no example of a mature economy that was able to grow its way out of a debt situation like this. I think, I'm not completely sure now, but I think there is a statistic saying like every country in the history of humankind that had a debt to GDP ratio of over 130% did not come back from it, eventually collapsed.
Yeah. Because of that maturity thing, just like I was saying, you can't tax the companies because you go south. And what allowed you to get to that level of debt was that expansion.
Exactly.
But now you've taken on the massive amount of debt at peak expansion, and now you got to pay it back, and there's no real continuing growth. So you have to assume further growth, but they've matured, and then that's when it rotates. So
eventually rotates,
eventually. No, that's the next thing with this. I think this game will be played on literally until it all blows up and fails. Like in a catastrophic type element. It was the same thing when I wrote a little thesis, and I put together my sort of trading accounts. At the time, I was thinking about opening like a larger fund or whatever, and I had two offers. Basically, it would have been an entropy fund and a vector fund. Physics terms. The idea was entropy fund being that this is going to go on for the next however many decades with QE, and that's to sort of keep up with that churn. And then the vector fund of sort of discrete alpha to outpace assuming that does keep going and make, over and above. So that's a keep up and then create alpha in the other fund. But yeah, so
I want to show you guys something I'm watching here. So I just want to update everyone on the positions I have. So as you guys know, I'm a swing trader and I don't make a lot of decisions in my trading, but the show you some of the things that I'm looking at to perhaps make some changes. So I got Euro GBP entered this one last week, and then we have, of course, the gold one. I've increased my stop loss to have it below the range here, and then I'm looking to where most likely, we're going to get a rejection at the all-time highs here. Perhaps come down, create a higher lows number here, and then that is the signal for me to move my stops back up. And then I got AUD NCD. This is a weird chart here, but it had a gap down on the open here. Looking good. I'm still in this one, just waiting for another push to the upside to adjust the position. And then I got two more I want to show you guys. So first is CAD CHF, and then I have USD JPY. USD JPY, I know you guys talked about a short, and I think we have that top forming right now. But let's start with CAD CHF. This is a textbook example of a double bottom break and retest, like absolutely perfect. So I am potentially looking to buy this one. You can also see how it's like. It's just can't go wrong with this one. This is a daily potential of a fairly good move on this one if we start a new cycle or a new cyclical move or just a big a big pullback in an overall downtrend here. So what I'm looking at for CAD CHF is if we go to the weekly, I'm looking to retrace some of this move. So some of the move we have here. So either could be up to this level, perhaps up here, or all the way up here. Those are the levels I'm watching at for CAD CHF. I think this is going to be the first level where we're going to see a rejection. And that's probably going to be where I do believe we're going to get something happening. And even it's even a 2R with a very, very wide stop loss and a safe trade. Then the other one I'm looking at is USD JPY. Now this has, in my opinion, confirmed a top, because if you look at the higher time frames, we go out and look at the weekly, we have hit that range highs, equal highs, and we got that range highs. So it's looking pretty good. Let me just adjust the screen. And if we go into the daily, we can see that we had a lower high right here. We're testing the lows, and it looks like we're ready to potentially break down here. Now the entry, obviously, best type of entry would have been up here or even at the top. But I think this is the type of move that you guys have been looking for, right?
Yeah. Eventually, it's one of those things that, like, eventually it has to crumble under its own weight. Just economically, mathematically, there's too much money out there that it has to ultimately come down. Now, I think there has been, because for a while there wasn't actually a lot of, or an excess of speculative money running into the whole dollar yen carry trade, despite it having ripped for quite some time. A lot of that got flushed out through the previous periods when we were starting to push that 160, and we did have some of that Bank of Japan intervention, right? And they didn't really join back in size to the same degree. So it has been interesting to see that we have held up. Now I think that there's a bunch of doubts with all sorts, whether they'll actually push on with the rate increases, all this kind of thing. But I think we're at such a point that it's going to balk anytime. And I mean, we had Warren Buffett; he bought an absolute ridiculous amount of bonds some time ago. I remember, I forget what month this was, but I shared that with you guys back then. And it looks to have timed that very nicely. overall.
Yeah, he bought a lot. I actually had to jump off. Both you and me, LJ, we have a meeting to discuss the upcoming event here on the 22nd. So we'll have to perhaps continue this discussion once we are back.
We'll be back in 30 minutes or so.
Yeah, not too long. We'll be back soon. And Dirk, I am sure that they'll love to have some alone time with you. So
More than enough stuff to talk about. Don't worry about it.
All right, cool.
Goodie, guys. Okay, see you in a while then. We can, of course, later discuss about this dollar-yen trade, but it's like LJ, like Jonatan just said, I think one of the most interesting trades, at least in Forex right now, because it also highlights one of the things that at least a lot of beginner traders kind of to neglect. And that is looking at what the treasury bond market is doing, what the bond markets are doing. So you can see here, like that lately, dollar yen has been coming a little bit down now. So the yen is getting stronger towards the dollar. And the reason for that happening is really mostly to what is going on currently with the yield difference between shorter term Japanese bonds and US dollar bonds. So we've seen the yield, for example, here for 2-year Japanese bonds, it broke over 1%. You see this gap here in early December. Back then, LJ and I said already, well, that's the highest we've been for the past 17 years. And with the US rates cut coming in now, probably this is going to mean that dollar yen is going lower. At the same time, yields for US dollar bonds with a maturity of 2 years have been coming massively down. I mean, look, we were all the way not too long ago in April 2024 at 5%. And of course, with the interest rate environment in the USA coming lower, the yields here have been going lower as well. Now, why is that important for the exchange rate between dollar and yen? Well, it's simple. Dollar yen was always a so-called carry trade played by a lot of institutionals, by a lot of hedge funds. A carry trade means if I buy dollar yen, for example, this translates into I'm buying dollar, I'm selling Japanese yen. So I'm owning dollar, which I, of course, get an interest rate for. And so, for example, on the 2-year curve now, currently, that would be around 3.5%. I'm selling yen, so I'm owning yen, so I have to pay right now around 107% per year, that is, of course. So that means, of course, that, hey, this is, a pretty nice trade. That means if I can borrow yen, I invest them in US dollar, and I get more interest rate for the US dollar I'm owning than for the yen that I owe to somebody else. And this, when the spread is high enough, which it was in the past, this plays out very nice because you basically get free money. And at least unless the conversion rate between dollar and yen doesn't go too much to the south. But as those two yields, as those two interest rate levels get closer and closer, this trade becomes less attractive. And we've seen kind of a tipping point starting already in July 24, where we went massively down, then it went back up again. But you see really, like on a long-term curve, how the market slowly has tilted, has changed its structure from an uptrend, a massive uptrend, where the dollar massively gained strength, or you can also say the yen lost a lot of strength towards the US dollar, to more of a very volatile sideways range. And now going down, I said already when we were first discussing this back in, I think it was July or August, I said, well, everything actually in my models points to a fair evaluation or a fair valuation around 125 to 135. But that's always the thing, with models. Just because something is fairly priced at a certain rate, it doesn't mean that becomes automatically true. Of course. So just because you found something that can sometimes take a lot of edge until it becomes true. But just like to unwind. And the thing always about trades like this, unwinding carry trades, is that eventually everybody in this trade will need to get out of this trade at the same time. Then you see often things like this happening, what we saw in July, like large red candles, for example, because everybody is getting liquidated. Everybody needs to get out at the same time. So potentially really, really interesting trade. We need to see, of course, here from a technical side of if the 8 weeks moving average, which is the blue line here, is going to hold up, or if we are in a very quick reaction going all the way down to somewhere between 150.5 and 152. So, guys, before I continue now here, and of course we want to take our time here until LJ and Jonatan are back to talk about some trades also that I'm currently in. I want to ask you also if you have any trades right now that you would like me to have a look at. Secondly, I would like to ask you to leave us a like and subscribe. Let me see how many subscribers we actually have right now. We are now sitting at almost 92,000 subscribers, so not far away from 100,000 subscribers, which is, of course, when Jonatan is going to get this nice YouTube plaque for his background in the video. So we want that, obviously. Once we reach where we are going to have a lot of nice giveaways probably for you guys again. So you can support us by leaving a like, subscribing to the channel, and of course also commenting here. I see here a lot of comments from TJ Babs today. So first of all, thank you for those. Long NASDAQ, I am, as a matter of fact, as well. I opened here, this is in one of my automated systems, a long position very, very early this morning, around 25,250. NASDAQ for me has been a bit of a difficult trade, at least when it comes to automated trading, because we were in this very choppy phase where not so much volatility-wise was going on to the north and south, which is usually because I'm trading a trend following strategy here. My strategy loses money. Last trades here were really, really nice. One of the best ones I had in a while in NASDAQ, where I caught a nice short position all the way down until this long. And but it seems like if I have to put kind of my feeling or what I see also from the technical side here, looks like that the long side is going to prevail a little bit today. So I'm on your side there. I think short term today, a long position in the NASDAQ could be a good one. Then we have MOM Bucks being long in gold. Absolutely one of my super trades at the moment. Went long there actually Friday evening at around 4,275. Still in that trade. So up $75 per ounce there. And right now, it doesn't really look like it wants to stop, in my opinion, at least. Then we have here Infinity asking, Dirk, what do you think of silver? We discussed silver, I think, was it last week? I'm not so super sure right now where we talked about silver. Let me quickly see here. Silver, of course, crazy as well. Has been lingering, has been a little bit like the ugly stepbrother of gold, if I have to put that somehow into a metaphor. But it's been outperforming on a correlation level, gold, for a while now. So usually you'll see that, of course, gold and silver have a high beta factor, but the correlation has been that silver has massively outperformed, at least for a couple of weeks, gold. However, if you want to trade the precious metals markets, I always would go, honestly speaking, for gold, because just because of the fact that silver is so much more volatile. So you need to be really, really careful with your stops there. And we have in gold already sometimes these crazy spikes, which is rather unusual for the largest asset class in the world. But compared to silver, which of course has a much, much lower market capitalization, you really want to make sure that you have your risk toned down a lot. And I also don't see what the attractiveness, except the higher volatility of thinking of trading silver is. So because when we see breakout of gold to the north, let's say we see something like 4,500 this week, of course, we're going to see the same in silver. However, the breakout in silver doesn't necessarily mean that we're going to see a breakout in gold as well. It's a little bit like trading Bitcoin versus trading altcoins, when like most of the altcoins, with some exceptions out there, copy pretty much 95% of what Bitcoin is doing. Why should you trade the altcoin? Except, if you want like something that when Bitcoin moves by a larger factor than Bitcoin. So there yet, I see question about euro dollar as well, which I happily touch base on. Actually, I'm working right now. Let me change to a different screen here very quickly, guys. I'm working on something right now there. But where is it? Where is it? This is the one, I think. So this is the one. Yeah, this is the one. So right now I'm working on a little tool. You guys know probably I come from option trading. And I'm working on a little tool here which allows us to translate what is going on basically on the option markets to forex spot trades. So what this tool does, and it's still in the experimental stage, so it's not available yet, this tool, but what you basically will be able to do with this in the future is that you'll see for every day where are currently euro dollar options expiring. So this is what you see up here. And then the tool will analyze for you, first of all, where is the pain curve? How is that doing? Where's the max pain? Max pain means like this is at the daily option expiry, where the buyers of options would be hurt the most, which right now for today is somewhere around 115.60. We're not going to go that low, obviously, today, but in a tendency before expiry, which is 10 a.m. New York every day, the price likes to move in a tendency more towards the max pain level. And then this tool will analyze for you, first of all, what is a general trading signal for today and what the market likely is going to do before and after the expiry. They're not like great trading signals today. As I said, it's all still very, very experimental. So I need to back this up by backtest, by statistics, by machine learning first. But by the end of the day, this tool is going to give you an opinion about, what is most likely going to happen, for example, with euro dollar. The same for other currency pairs on this day after option expiry. Why is that important? Because those option expiries move a lot of money in the market. So, for example, today we have like billions of US dollars more in calls expiring, meaning that probably when those are going to be unhedged after expiry, there's coming a little sell pressure into the markets. And what it also does, for example, tells you how are the different strikes that are expiring today with a notional value? Are they likely to attract the price, or are they more likely to bounce the price off their strike level? So this will give you a little bit more insights into what is going on. Yeah, max pain level, Tim is asking here. Max pain level basically means if you look at call expiries and put expiries, the max pain level means the point at expiry where the people who bought an option lose the most money. So the ones who sold the options obviously are interested in keeping what they got in premium. And so they are going to, in theory, at least push the price towards this max pain level. This is a phenomenon we see quite often in the option markets, that before expiry, price likes to move, pardon me, towards this max pain level. And the max pain level is the curve you are seeing right now. So in theory today, we should actually see pressure on euro US dollar. However, since the max pain level is very low today, as I said, it's around 115.70. It's of course a large margin away from the current price. We're not going to move by 200 pips into this direction. However, as I said, this is a theoretical concept, and I still need to back this up with actual data so we can, keep we can get actual trading signals from this. So this tool is not yet available publicly. I'm still in the testing phase. And this is not an indicator showing max pain level. This is a calculation method that I'm doing here with the tool I'm designing. So you cannot find this, for example, on TradingView. Simply due to the fact that TradingView doesn't have option expiries you can look at. So just a sneak preview of what is coming up allows us to look at the market in a different way that we are currently doing. Let's quickly go back here to actual charts. Yeah, I will keep you posted on that. No worries. If I find something, that's worthwhile sharing. As with always, when you backtest strategies and theories, the results always can be like, oh, okay, there is no actual edge, so no need to keep going with this. But being an option trader myself, I know that there's an edge. It might be hard to find because most of the option market is so-called OTC, over the counter, meaning being dealt directly between clients and banks. So there's no central exchange. So the data you can get your hands on, at least without having too much to spend every month, is quite difficult to attain. You can, of course, buy something like a Bloomberg terminal, but that puts you down by around $27,000 per year. So as you might imagine, this is not something I want to do, at least right now. So we talked about gold, we talked about dollar yen, we talked about the NASDAQ. What else is there you want to talk about, guys? I saw somebody, Ty Baylis, I hope I'm pronouncing that right, asking about Aussie dollar, which we probably should wait for until our expert LJ on the Aussie dollar is back. But I'm looking at this right now from a pure technical perspective. Now, because I'm not very much engaged in Aussie pairs, to be honest with you, at least when it comes to option trading. But the way I see it here right now, and let's ask LJ later again, is from a pure technical perspective. Of course, this is the level. This is the level where we bounced off again last Wednesday. So we are in a sideways market again, where you could, of course, argue that we have something like is that like a triangle or whatever that is like ascending, or however you name it. So I like to call this a zone of compression, to be honest with you. So where maybe eventually we'll see something like this, where price eventually will get more and more compressed until you see either to the upside a volatile breakout, or to the downside. Now, in what direction this breakout will come, in my opinion, depends, of course, heavily on what is going on with the US dollar. LJ mentioned that earlier. We came out of kind of a phase now where the market was at a low volatility level, very choppy, because nobody knew really what was going on with the economy. So we were kind of flying blind for 6 to 8 weeks. Now that slowly the numbers are coming in, again, we get a better picture, which is, at least at the moment, that the job market is doing not so super well. And what do we have? Yeah, we can see here already, we have quite a number of new data this week coming in. EU interest rate decision, obviously, as well. Core inflation is going to be a great one. We said, or an interesting one. We said earlier already that it seems like that the USA are kind of preparing for inflation of the new inflation thresholds for the central bank going to be 3%. But let's see. That's for sure going to be a very, very important one this week. And I think, especially for pairs like Aussie dollar, Kiwi dollar, the main driving factor is going to be what is the US dollar doing. So you might want, if you consider a position there, also look at the Dixie, so the US dollar index, and what this one is doing. And I mean, this is also something we've been talking about for such a long time, that every time we tick up, so every time we see kind of US dollar strength, it's deflected at this level of 100. So this trend line has been on this chart for a couple of months. I think the first time was really here in July where I drew it. I said, like, for me, it looks like we are going to again and again and again being deflected there, meaning that over time, the narration is probably going to be that we are going to see a weaker US dollar, which also fits into a looser view on inflation of the Fed, of course. Good, guys. What other pairs are you currently in? Any trades you're currently in you don't feel so secure about, you want an opinion on? Anybody trading crypto at the moment? Bitcoin or Ethereum, which has also been a crazy pair. Like if you trade, for example, Bitcoin versus Ethereum, that has also been a crazy trade. Ethereum, Bitcoin, quite an interesting trade. Look at how the velocity to the downside has been being here. So since pretty much the high was here in December 21, I I still remember that very well. That's why I have to smile a little bit, because a lot of people on social media back then were saying, whoa, Ethereum is the new Bitcoin. Why should you buy Bitcoin when you can buy Ethereum? And ever since then, Ethereum has lost basically value if you measure it with against Bitcoin. So sorry to say, I think the long term, at least short term, like if you trade, like scalp the crypto markets, Ethereum can be the better choice, in my opinion. At least Bitcoin is more of a matured order book there already, but long term, I don't think Ethereum can prevail against Bitcoin. And yes, I do. I do know of any long-term stock investments. I do invest also long-term in stocks, although I have been slowly, month per month since January, in unwinding on risk on investments. So I've been selling Bitcoin slowly. I've been selling US stocks slowly, and I've been doing so because of a pattern that we see very often. Well, actually, for the past, what is that, for 12, this is the fourth one. So you can say for the past 14 to 16 years on the stock markets, which is that after each election, I'm talking about the election. I'm not talking about when the president actually, takes the power, which is in the USA normally like 2 months after the election. So after each election, there is a persistent stock market pattern, at least under the last 3 presidencies, which always has been, you see 1 year of nicely growing stocks. Then you see about 1.5 years where things get more choppy. And after this, things are going up again. You've seen that pattern under, for example, Joe Biden, which is the green one here. You've seen this under the first presidency of Donald Trump, the orange one. You've seen that under Barack Obama, although the volatility was a bit lower there. We were also at lower stock market levels, to be fair there. And the question is now, are we going to see the same pattern again under Donald Trump? There is one difference. We had this time, this V-shaped recovery. So we saw quite a slump in Q2 for stocks, Q1 to Q2. Until we saw the V-shaped recovery. This is the S&P 500 that I'm looking here. And right now we are here. So we should naturally be pretty much at the top, which always came in between November and mid of January under each president. And if things follow along the same pattern that we've been seeing under the last 3 presidents, then we could be in for something like this, where either we go just sideways or go a bit down. And what so beautifully fits into that narrative, at least at the moment, is all the insecurities and uncertainties we see from the AI side at the moment. So if we look at stocks like, I think the most prominent one probably since last week has been Oracle, who has been massively failing their the predictions of what their earnings should be. So Oracle, and that shook up the whole stock market, has been down since its top by almost 47%. And because of that, suddenly people are starting to doubt the whole stock market narrative, the whole AI narrative. So we've seen, to a lesser extent, of course, because they are still earning a lot of money, Nvidia also getting under pressure. So Nvidia also down by 17%. We've seen the same with a number of AI stocks. So this kind of, for me, could be, of course, it could be this type of V-shaped thing again, where everything is forgotten very, very fast. But it also could stand for, if we look at the presidential election pattern here, that maybe this is the narrative that is going to drive us down for the next 1 to 1.5 years. And I'm not even saying like massively down. It also can be just sideways, which is a good thing, of course, because it means that that the earnings of those AI companies are catching up a little bit more to reality again. Like back then with the internet, where the bubble burst, there's probably at least a mild bursting bubble right now also going on in AI, which will drive down valuations of companies to more sustainable levels again. How this is going to play out, and I know, for example, LJ is totally thinking differently about this, which is okay, because this is what we're here for, to discuss about things like this. But I wouldn't be surprised that somewhere in 2026, I'm actually more leaning towards the first quarter. We are in more trouble when it comes to valuations on the stock markets, and that you're maybe going to see something more like FUD in the market. LJ is already in the background again. I've been quoting you a little bit here, LJ. I know LJ is more leaning towards that scenario later in 2026. However, for me, what I see here in the happening right now, going on with AI valuations, I'm leaning more towards the first or second quarter of 2026 that could happen. Could be a great opportunity, though, to buy. As a trader, it doesn't really matter. If you are scalping the markets, if you're swing trading, it won't really matter for you. But if you are looking long-term in stock investments, and that was the question here, for me is, for example, probably in late 2026, maybe November 2026, like the point where I'm considering again that I want to slowly scale into more risky stocks. Let's put it like this. Again, it's a different story if you're looking at stocks like Walmart, or classic value investing stocks. So we're talking about a typical growth strategy here. Any other question, guys? What are you trading at the moment? Let's see here. There was just now. And was that? Oh, this was on Friday. Short signal on euro dollar from my system. So that kind of fits into this max pain lower levels, at least before New York close, before 10 a.m. New York, that is for today as well. However, it's not a trade I took because I didn't want to stay exposed in a euro dollar position over the weekend. But you can see like this system kind of is quite good, capable of detecting where are potential swing highs and swing lows. Haven't automated it yet, still quite a new system, but something I want to combine, for example, with the analysis you just said on just saw on option expiries from me. Good. What else are you trading? Anybody else in stocks? Anybody trading oil at the moment? It's also interesting. A market I'm not trading, but interesting how oil prices have come under pressure, right? I'm the worst oil trader in the world, by the way. That's not why. That's why I'm not trading it, and I'm still waiting for it to be reflected also in the prices that we pay for gasoline here. Yeah, Infinity asking, what do you think about the upcoming year 2026? Will markets show us massive movements? Well, massive movements for sure. But like I just said, I'm a little bit more on the conservative side here, at least when it comes to risk on assets, because of this election pattern we see over and over again, and because of the notions that I see now from AI companies who have been driving this growth of the stock markets. That are getting in trouble because we are looking at higher and higher valuations and especially also expectations when it comes to earnings per share that are going to be harder and harder to beat. We're also getting into a market where we kind of get bottlenecks. We are seeing that, for example, in RAM prices right now, where I was looking to buy a new graphic card to replace the one I have here. It's an AMD graphic card, actually a high-end one, but I don't know why my system doesn't like it, and it likes to hang itself up. And for machine learning, I want to get an NVIDIA graphic card. So this is a bottleneck. The prices are crazy high. As a retail person, it's basically either impossible or very hard to get your hands on RAM right now. And this will also have an effect on the markets, I believe. Welcome back, LJ. And he's gone again. Okay. Let me remove him. I think probably has a little bit of difficulties with connection right now. So it's of course just an educated guess that I'm doing here. Very often in the past, especially the US economy can prove us wrong. That it's more robust than it really seems at the moment. But if the markets follow the pattern that they have been following for the past 15 years, we are in for more volatile, at least sideways moves. So kind of like lost, let's say 1 to 1.5 years. You are talking about which indicator are you talking? This one or this one here? So this one is called real-time swing detector. If you mean this one, it's one of my own creations, but sorry to say it's not publicly available because I use that for my own trading strategies. And of course, a lot of work goes into indicators like this that I'm not giving them away. But, you can, I think I'm not going to say easily, but you can also design something like this by yourself. And this is a good question here. Will we see a rally on NASDAQ to the end of the year? I believe we will, simply, and not for technical reasons, simply for reasons of, what is it called? Window dressing, I think the English term for that is. What is window dressing? Window dressing is, by the end of the year, if you, for example, run a hedge fund or a mutual fund that is supposed to be heavily invested in stocks, it's not a good thing if by the end of a year you show like that you are sitting, for example, on 30% cash, especially if the stock market have been performing like they have this year. So usually by the end of the day, by the end of the year, and this happens in the last 2 weeks of a year, usually you'll see risk on assets when going up. So I would not at all be surprised if the NASDAQ attacks 26,000, which by the way was my target. So this I painted in mid of a year here, or even goes to a new all-time high. Same for the stock markets. And I wouldn't be surprised to see that so-called window dressing, and then another little sell-off that starts again in early of January. When let's say the monkeys off the back of the fund managers, that they have to show like, guys, the stock market performed well. So here we were like 90% invested in the stock markets and just sitting on a little bit of cash. This is also why it's more hard towards the end of the year to only rely on technical indicators, in my opinion. Connection. I hope my connection is good. Am I blurred or something? So if I'm blurred or you cannot hear me or anything, leave me a quick note here. Inverse head and shoulders on the NASDAQ. yeah, you mean like basically probably this one here, no? Like here's the shoulder, there would be the head, and then price basically would do something like this. I'm not a big fan, honestly speaking, of those classical chart patterns like head and shoulders or teacup, cup and handle, not teacup, cup and handle, I think it's called, no? And things like this. But I know like some traders, and I think one of good example of it is Victor. They like to use structures like this. He calls them Quasimodos, and trades of them on lower time frame of what is happening on the higher time frames. So for sure, if you're into like pattern analysis, I want to call it, that could be interpreted as a inverse head and shoulders, or is it more like a classical head and shoulders? Okay, picture blurred a bit. Yeah, we have a little bit of difficulties lately here with the software. But as long as you can hear me and as long as you can see my chart, that's the most important thing, of course. What is also important, and I'm repeating myself here, I know, guys, is to leave us a like and subscribe to the channel so we can hit very soon 100,000 subscribers. Good. What else shall we talk about? That's always the thing on Monday sessions. They tend to, at least in the morning, be a little bit slower because after after London opens, usually they like, at least traders out there on the more shorter time frames. And interesting, we just saw a sell signal from my system forming a gold here. So interesting. Let's see if it's just a temporary pullback or if it's going to be a false signal. And what was I about to say? Yeah, because of traders in the UK session and Frankfurt sessions, so let's call it the European session, they are often waiting until New York opening, especially on days where we have either news coming out or we have large option expiries. Okay, I'm seeing here LJ's texting me a bit of technical difficulties right now. That's okay. So it seems like I'm not the only one. I can hear you, LJ, in the background now. We have Ty asking about Canada markets. I can hear you, LJ, yes. But it seems like he cannot hear me. Yeah. So for the Canadian dollar, of course, it's a bit tied to the oil price at the moment. However, I would more focus on the US dollar really there at the moment. I think if you are, for example, aiming to trade something like Canada yen or something like this, the trade really here is, in my opinion at least, more US dollar yen instead of CAD yen. So you see it's like really quite similar. Of course, we have in dollar yen more to the downside at the moment due to the effects of the carry trade unwinding. But we are, it's like this. Just hold on a second. Good. Okay. Good. Sorry, guys. I had to tell LJ there that I can hear him in the background, but he seems to not be able to hear or see me. So maybe, guys, if you could just tell me very quickly if you can see him. I want to be. Yeah, but I see now what you guys mean. I'm a little bit blurred. I'm seeing that myself right now on YouTube. Yeah, seems to be a bit of an issue with the software we are using here, which has been acting up a little bit lately. But as long as you can hear me and can see my chart, of course, that's very, very good. And all we need, all while we wait for LJ to fix his problems there in the background. Yeah, hearing here a bit blurred. Yeah, a bit of connection issue, but that should not keep us here from looking at a couple of trades. As I said just now, interesting for sure here that we saw a little sell signal in gold from my automated system at around 4,000. That is, of course, 340. Doesn't mean you need to jump on this trade. Always remember, please, guys, everything we are doing here is just for educational purposes. And just because we take a trade, which is 1 out of thousands trades from the systems we are using, doesn't mean necessarily that you need to take the same trade. And so it's just for informative purposes, of course, because we want to show you, also real trading action. However, not much going on. As I said, it's interesting here, euro dollar also coming a little bit up again. This is why I don't like to trade like really Friday trades, so to say, because you see a pattern like this very often that on Monday things go into the opposite direction again of what they were doing on Friday. NASDAQ still long, so that would kind of suit the narrative also if we see a continuation in the session until New York comes in of NASDAQ trending higher, that we see gold a little bit trending lower. Hey, LJ.
There we go. Thank you, Remy.
You can hear me too?
Yeah, I can hear you now.
Fantastic.
Before I couldn't hear you. You yourself weren't loading.
Yeah.
And I've been trying to add myself and it just won't work.
Yeah, people said like that also. I'm a little bit blurred right now, so there seems to be some connectivity issue again here with the software we are using. But as long as they can hear us and see our charts, that's good. They don't need to see our beautiful faces necessarily to hear what we are talking about.
Yours, Dirk. We just need your beautiful face.
Oh my God! Yeah.
That's what we need.
You're making me blush.
How are you doing, Louis? Good to see you, man.
So we were talking a bit about gold. I said I just had a short signal actually in gold from my automated system. I think that fits quite good in kind of what we're seeing this morning from the NASDAQ, that we're trending at least a little bit higher. Of course, we don't have very much velocity yet in the markets as it is during the early Monday morning sessions. Very, very often everybody's waiting for New York to come in and kind of give us a sense of direction of where the market is going to be. I said earlier, I was talking a little bit about the option analysis tool that I'm building right now, which I shared with you as well. It's of course highly experimental still, but that for euro dollar expiries this afternoon at New York cut, 10 a.m. New York cut, the max pain level is quite low. It's around 115.50. And I said in tendency, normally you see like the price behavior of price going towards max pain until expiry, but of course the max pain is quite low. That would mean we go down by 200 pips, which is obviously not going to happen. So it's a bit a lost sense of direction. I see more call expiries. So the theory is, gamma hedges unwinding, but I don't think this is going to have an effect today.
Yeah, I was going to say, what time frame is that calculating? Because it shouldn't be that low. That sounds like it has much older expiries included.
No. It's still based on data or just on partial data. So 85% of the option, at least Forex option markets, are OTC. So obviously I cannot get my hand on OTC data. It's like every bank keeps that for themselves,
Yeah.
or you actually need a Bloomberg terminal where this data is reported by banks. But at this point, I'm unwilling to pay $27,000 a year just to get that information, at least. So I'm relying here on the data that is publicly available, which is from DTCC. Which is like a service where banks also, or the market participant need to report to, which has a lot of strikes, which has also significant volume in reporting at least, but it's only about 10% to 15% of the whole picture. And this is why I also write on the
That'll be
platform.
why then. Yeah.
You know,
Because I was going to say,
everything experimental. It's like and
that makes sense then. Because that'll be way out. Because
and obviously
sadly,
also
the
for
CME used to just print them under.
But CME
is,
I mean, they have fixed expiries. No, it's not daily expiries. At least the options on futures. Next expiry is on the 19th. There, I'm also passing that data, but like I said, it's like I want the expires obviously for every day and not just once a week, for example.
They do have the daily ones on CME.
Yeah, the daily bulletins, but the expiries options on futures are on fixed dates.
Yeah, but they at least have each.
I'm passing that data as well.
Yeah, and typically they're every day or second day or whatever.
And also, to be fair, for max pain calculations, you also need to have somehow a cut off when it comes to the strike. It doesn't make sense, that you have an expiry of a euro dollar put at 108, that this is at least from a notional level equally weighted to an expiry that is like closer to being in the money. So a lot of cranks and hooks and so on that I still need to work on for that.
That's kind of what I was saying before. Like that seems to have old expiries that are out of current.
Exactly. Yeah. But that's exactly why I gave you like the access data to that you can.
And then we'll refine it
until we get to a system that makes us even richer.
Yeah. There we go.
Are you trading actually anything? Are you in any trade right now? As I said, I'm long NASDAQ. I'm now short gold. I didn't trade this one here because it was on a Friday in euro dollar. And that's pretty much what I'm doing right now. Do you have anything?
I was going to say, I've got my eyes on a NASDAQ long. I didn't get in early enough before when we're at a better sort of entry point. Down through earlier, just coming up towards London Open. So I missed that. So I would have preferred to enter somewhere down here by this sort of short-term 15-minute like double bottom that we formed through here.
Yeah.
And then, seeing some kind of recovery, at least back up to 200 MA or up higher to where we were during last Friday. So last Friday, we ended up getting knocked down because of the Oracle was saying they're delaying the OpenAI servers to 2028 instead of 27.
And the earnings reports was a disaster.
Yeah, they're burning.
I just said that we looked at it just now. They're like down 50% almost from the highest levels. Crazy.
Yeah. So I do still see some positivity in stocks, but I am very dubious. Right? We were talking. I think I have half of them on here. I think I removed them after on the Friday Discord call because it was getting too junked up. But we're looking for Friday's expected level was somewhere up here, 25,700 roughly, right? So we're looking at something like a slight tick up here and then basically off. Now we didn't make it fully up to the 700 option expiry, but overall it looked like, as well as the other market structure, just to the downside. So if anything, if we got to drive higher to up here, so close that strange gap we have, it would have been a downside picture regardless. So I end up going short through here, but I jumped out way too early.
Too
we
bad.
kept going, unfortunately. But that's how it goes. So the other thing I am in right now is that was from last week through here. What I am in now, long jumped in through here down the base, looking for some kind of run potentially to the highs and potentially above for euro dollar. So I did jump in through there. So I've got that. I've also got a Aussie dollar position.
Yeah, Aussie dollar, somebody was asking about earlier as well.
Here.
And I said, like, let's wait for LJ because I don't trade much Aussie dollar. And so I wanted to get the expert opinion on this one.
Yeah, so Aussie dollar definitely very much positive momentum overall. So if we scroll out a bit, end of year expectation is up here closer to about 67, somewhere in this top range. So we're just under that now. As far as euro dollar, we've come to my end of year expectation. We're right sort of in the middle of that at the moment. And then there's a possible draft higher if we get that little push above into 118s. But this band was my end of year expectation. So after last week's run higher, we've come up to there very nicely. We're now sitting right in the pocket of that. So Aussie dollar, I would expect for us to climb back up as well. Obviously, we got hit through here, which was on the back of that NASDAQ S&P, coming off on the Friday because of the AI news. So hence that, that risk-off flow that ends up coming through to stuff like the Aussie dollar, New Zealand dollar, those higher beta currencies. But I do expect this basically to recover, at least up into this mid-range, and we'll see coming into end of the week, because this is going to be our major trading week with all the data coming out, if we get up into that 67 pocket. So
it's kind of like somebody just asked me also, like, what do I see like in terms for stocks? Do I see an end of year rally? Where I said I think the possibility is quite high. Because of window dressing effects. And I know a lot of the fund managers out there probably still missed on large portions of the rally, of the V-shaped recovery we saw, especially on the NASDAQ. And nobody wants to show like, hey, I'm sitting 30% on cash, so they are probably going to buy and then maybe sell in early January again, just to make the books looking good, to show like, hey, you see, guys, we are invested in stocks. I'm investing in stocks for you. And that, of course, would also drive a narrative of Aussie dollar, euro dollar being at higher levels for the end of the year, in my opinion.
Yeah, I agree. And the only thing with stocks is I'm very, like I was saying just before I jumped off, I'm dubious on the rally. So I think it'll be more out of, like you were saying, that kind of technical aspect, window dressing, those types of things, not necessarily like raw confidence in further expansion of the market. So, right. So I think it'd be more of a short-term strategic type play versus some kind of signal of enduring confidence.
Yeah, absolutely.
And I think I've spoken about before, I think coming into start of the year, I think we'll have some slight wobbles, ultimately coming into a drive higher for Q1, Q2, and then coming down. I know you've said you think...
this is like, I mean, we are 85% pretty much on the same line when it comes to longer term outlooks, right?
It's literally just a... I think it'll be the liquidity expansion that will give enough lift to the backdrop.
Yeah, I get what you mean. My narratives. I've been looking for something, to kind of back my pure technical view on, if what happened during the past 3 presidencies happens again, meaning like from between November and end of January, beginning of February, we're going more in a sideways or slightly down phase. What could trigger this? And what we've seen, for example, from Oracle now, that could be the beginning of that we have so high expectations now when it comes to AI stocks and especially earnings of the per share of the AI stocks, because you somehow need to justify the valuations, right? That this is going to make it more and more difficult, to keep the expectations, to justify those expectations, and make people more and more doubt, like, hey, is this really the growth trajectory we have on AI stocks that we've been seeing in 2025? Can that be sustainable for 2026? What speaks against that is that, of course, it's going to take a while until we are going to see the Q4 results for all stocks, as a matter of fact. This is not going to happen in January. This is going to probably be February or March, if I'm not mistaken, until we see the results there. So there could be a delayed effect of that. It could be even a quarter more delayed, and then we would be in that pocket, what you are saying, that we might see still actually quite good performing markets, maybe not with the crazy velocity that we've seen in 2025 for the majority of time, but still growth until well into, I don't know, mid or even Q3 of 2026.
Yeah, so my thinking is how it goes similar to crypto, how the cycles kind of change. So as far as the US debt turnover cycle, where we used to have those 4-year cycles, and then hence, like you were talking with the political sort of cycle affiliation, that lines up very neatly. We've now gone to this kind of 5.5-year cycle, right? And so I think both with stocks, the overall liquidity profile, that kind of stuff, that will expand a bit further and go for a bit longer. And so the same way that the crypto, Bitcoin, whatever, I think it's still in play, but it'll take a bit longer to sort of run through. So that's kind of what I'm leaning on. What's that?
Are we? I just jumped on here and I can't see Dirk. Sorry, can you guys hear me? Am I live?
Yeah, no, we can hear. Look,
Jonathan, can you guys see me again and hear me? Or?
I had the same problem. I was saying as well, I couldn't see Dirk. I couldn't hear him anything. It seems to take a while, but it does load up.
Welcome to the Fivers Live Trading Group. We are trying to be as professional as we can, but sometimes technology decides that no, we're not going to be professional. We're going to ruin everything, and we're going to create just a hilarious viewer experience here.
And thus we have to ask
can you hear us?
3 minutes if you can hear and see us.
Can Jonatan even hear us right now?
I don't know.
Yeah, who am I? Who are we? Like, who am I? You know, can I even see?
Can you hear us?
Can you actually hear us?
Yeah, I can hear you.
Okay, you can. Oh, I wasn't sure.
Somehow the reaction is also like delayed. I mean, to be fair, the signal has to go like one time around the world and back again. You know?
Oh my god. Yeah. Well, we're getting close to the third industrial revolution, which is the AI, and but we can't get this fixed.
Now, I'm going to answer to this with a sentence only people who use actually large language models, specifically Claude, can understand. I totally agree with you.
Yeah, show off the tree.
Claude is getting...
there it is. It is right here. There it is.
Ridiculous.
That's the tree right there.
Claude is absolutely insane. 75% of this option thing I'm building right now was coded by Claude.
Yeah,
I'm just giving the direction and saying like, hey, look at this, look at that, analyze this, make sure this is consistent in terms of data. And
yeah, Claude is the GOAT. I was just going to answer this. So, Ravi, so what these are, these dotted lines on my chart, this is basically a standard deviation channel, right? So what that is this center line is the midpoint of price. This is one standard deviation above, and this is 2 standard deviations, right? So I basically use these almost as like a better Bollinger Band type thing.
Yeah.
You tend to encapsulate price within these levels. So if you understand a standard distribution, which obviously markets do not fit perfectly into a standard distribution, don't make that mistake, but over a short time period, they tend to fit. So your 2 standard div is... what is it, Dirk? Correct me if I'm wrong, 97.9% of all price action?
Yes.
Isn't that the first...
Yeah.
So
Yeah, and the problem that makes you lose money, most people are the rest of that one, the 0.3%. Yeah,
Yeah. So,
that
but
especially
basically,
counts.
yeah, the point is typically 97.9% of price action is going to stay within this range. So basically, what you're looking at is once you get to those outer levels, you've got a very high confidence infidel, uh, uh, infidel interval,
Infidel.
very high confidence interval, right? That price is likely to move back to the mean. Okay, so
What type
come
of
back to
trading
the
strategy is this?
A very high confidel in self.
basically to come back into at least the midpoint or some of the lower bands, and depending on the momentum, the other characteristics of the market, correlation, that kind of stuff, you often then draw right to the base level, right? And so you can trade in between these levels back and forth. So say, for instance, you got long through here, you'd be looking for some kind of failure towards the high band for your take profit. And the same deal when you see it price move outside of the bands, typically that's an extreme extension of price. So that's the point also where you have to be careful sometimes, because it's often based on something very strong that has actually been able to move price out of that. And typically that can often be a macro change, could be data, central bank, something that's actually shifted the overall trajectory of the trend or momentum or otherwise. But
I think it's also
typically,
more valuable like short term. If you use that like on lower time frame charts. If you use
yes,
that like on a daily, I don't think you'll get super much of it.
yeah,
Because what
because
you just described,
exactly, because
the macro changes hit harder.
yeah, because on the daily you encapsulate too much information,
Yeah.
and those larger shifts, and you get tail risk exposure. But on a very short time, um, typically there's not going to be something happening over the next 1, 4, 6, 10 hours that is going to be that astronomical. That's going to blow you out, right? Typically, price will sit within its general day-to-day activity. So on that shorter time frame, it is a good, sort of framework to use. And basically, you can trade end to end.
Now, I imagine with that information, probably a lot of viewers out there might have a question: hey, can I use this for news trading, for example?
Yeah. I mean,
Yes.
to a degree, yeah. If you see the extensions of price on news trading, and so long as the news is like, it might say, use an example of like a NFP number that is positive. So it's been a good number, but it's not astronomical, or it's either been a bad number, but it's not astronomically bad. Like it's just within the general purview, but it's got a tilt on the expected data. You can use that as peaks and troughs, definitely.
Yeah.
And so what I typically find the best number to run is 120 as the look back period. And that is, that goes for 5 minute, 15 minute, half an hour, 1 hour. Above that, it gets more muddy, but 120 is very good on each of those timeframes.
It's interesting. It's one of the rare occasions where something works better on the lower time frames than on the higher
So you can
lines.
see we go down to a 5 minute, right? If you traded this point to point, amazing. Go to the 15, you would have encapsulated the downdraft through here. You see that that's an extension price. You get in, through there, bang, low point, high point. You've got heaps of this. Same with gold, silver. Silver's been very interesting with this. Especially if we go to like a 1 hour.
So what
Right.
what tool is it? Is it just linear regression? No, not regression. Is it linear?
Deviation.
Standard deviation chain.
Nothing to do with linear or logarithmic.
Yeah. I know. So it's just a linear best fit line.
Dirk.
Why
It's just like it's just random drawing. I can do it better. It was like kind of a message that swung with it. I know it's not true.
Well, okay, so I feel like you're laughing because you think I'm stupid. Is that the
No, no,
case?
no, 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 no. I was laughing because, like, the meta message, if a person doesn't know you, was like kind of like, it's just random drawing. You know, I can do that better than that.
Yeah. Well, but that's what it is. It takes the best fit line of price action and then puts standard deviation on it, right?
Yeah.
Yeah, pretty much. So yeah, it's the average of the past 120 bars, and then a one
Yeah.
standard div and two standard div above and below, right? So you can see
So
as well with
what
silver with this, it's encapsulated.
yeah.
Each of the peak low points, you get up to here. Okay, you pull back into the one,
Hmm.
and then into the midpoint. Up here, now you've got technical stuff. You combine that with your general TA stuff, where here you're hitting like a double top, end up getting a bit of a fake out through there, came right down. You see we crashed through the lower expansion, and then bang, we're coming up to come back into the midpoint. So even on silver right now, you could expect that where we are now, we at least go back to the mid, up by these highs, and then it's a question of do we propel those highs up to the next level, right? So you can draw out your pieces. So this should go to here. This is the next test point, and then potentially you're looking somewhere up here, right? And you can also see that you can extend that out over time. Over what days are we expecting this? So today, tomorrow, the next day, right? And you see we could be at 69 cents in by Thursday, $69. Sorry, as an example. Right?
69 cents.
That would be the best short
really?
ever.
That would be a good short. Talk about the big short. That interesting. Someone mines this asteroid of silver.
Yeah.
No, I like that. I think it's such a basic, fundamental. It's statistics basically, right? It's statistics, and then they put it on price. You're basically just looking at what's the average price, and then what's the 1, 2, 3 standard deviation of that statistics, and then you're looking at price action, and you'll be amazed how often you'll see the how statistics with probabilities align so well with market price action, which also tells us that it tells us a lot of things. I forget what I was going to say, but it tells us a lot of things, and those
I
things
would
are
say
interesting.
it's basically like the simplest complex indicator that you can get,
Yeah.
right? So it's a little bit more complex than a lot of your basic indicators out there, in such that it is statistics and that kind of thing, but it's still extremely simple that you don't really need a great depth to understand it or any sort of further input. I don't know. It's the
Yeah.
most rudimentary, simple, but slightly sophisticated indicator. It's yeah.
But when we're
As a
talking
poor
about
description, I had the description in my head a bit better versus how I communicated it. But
yeah, isn't it always like that? It's like when I'm planning a webinar or something. I'm like, you know what? I don't have to write this down. I know exactly what I'm
yeah,
supposed to talk about. I know exactly how to describe this, and then I'm like, all right. So basically, number go up, and that's why I buy Bitcoin.
Yeah.
Yeah,
exactly.
pretty
Like
good.
this in my head, I always sound much more sophisticated than I really am.
Yeah, in my head, I'm actually very, very smart.
But in reality, I'm
Yeah,
Yeah, I'm just
yeah.
price go
It's
up, market buy.
indicators as
banana
well.
good.
Yeah. Oh my god.
It's
No, but really,
No.
but it shows like, and the beauty of it is a lot of hedge funds, a lot of especially algo trading companies out there, quant traders, so to say, they work with this.
Yeah,
Like we,
that's
of course, on a more sophisticated level, but these are
yeah,
the people driving the markets with the volumes.
Do you want to if you want to take this to the next level? So I think there's a couple of, let's call it, fundamental truth of how prices move, and I believe we have the most obvious one for me is the idea of first mean reversion and then volatility expansion. And I think for a lot of these systems, you see, for example, what LJ is showing here with the standard deviation channels, that is a type of mean reversion. And even in a trending market, you're going to have mean reverting moves because you have, and that's exactly what you're seeing here. You have an uptrend, but you see the price eventually is going to revert back to the mean of that trend. And what you also see at the low of the channel and the high of the channel, you have one law of price action which says that after low volatility, you're always going to get high volatility, and after high volatility, you're always going to get low volatility. The volatility is never going to return back to the mean. Right? Volatility will go from low to high, from high to low, and that's exactly what you're seeing on that chart. That's why I believe the best possible way of trading the markets is to find markets that are overextended and showing signs of low volatility, because you will then know that it's like you're expanding that rubber band. Now, what happens when the rubber band is as expanded as possible? Well, at the very ends, you're gonna have very compressed a very compressed rubber band, right? And then you release it, and it snaps back. So volatility becomes, price becomes expanded, volatility becomes low, and then you release it, volatility becomes very much expanded, and price contracts. Those are the two. And speaking of that, that's what I'm trying to work on when I'm developing my algorithms, because it's something that should in theory be fairly simple to systemize, but from a discretionary point of view, it's not really always that easy to see it. But I think statistically, and looking at the numbers, you can find the patterns in that. So
Yeah.
what you have right here, we have a channel, standard deviation channel. Now, what I would be interested to see is within that channel have sort of a type of Bollinger Bands type of indicator based on the lower time frames um, to identify the contracting volatility.
Yeah, so I was going to say, like you were saying with that, it's really good for mean reversion. And then it also has the double thing of, you can still use it for price like expansion, right? When you've got a breakup structure, that kind of stuff. So say, for instance, you get above these highs, whatever. Now you can see that, your sort of move is up towards here, right? In relative stance. So it's good for both on both sides. And just like Dirk highlighted, yes, this is more along the lines of how sophisticated participants operate, whether quant farms, all that kind of stuff. So hence that is basically what I was trying to say as far as a sophisticated but simple indicator, right?
You're trying to
it's
say
something
that
you can
you're
slap on.
sophisticated.
Yeah, but it's very simple that anyone can understand it. They can use it. They can put it on the thing. It doesn't take some deeper levels of understanding. It's pretty basic, but gets very close towards institutional side and sort of aligned with that. Because then it's all, statistics, that kind of thing. Law of large numbers. You got buyers and sellers on both sides. Price has to revert and sort of tends to stay in some relative band, because yes, you do have both sides of the market. So it works very well on mean reversion, expansion of a trend or momentum, as well as finding when momentum has completely died and there's a huge system shift. Because if somehow you had, things just crash out through here, now you're trading down here and price is stuck, and then we keep going like that, and the bands are still running, you can clearly see a large regime shift, right?
Yeah.
If that were to happen, and it's very obvious. And
now let me ask you something about the fact that markets are not showing a normal distribution. We're not seeing that normal distribution bell curve. We're usually seeing a right tail or a left tail. But isn't that what a trending market is? Isn't that what when you have a trending mean price? That is basically what we're seeing, right?
Wait, sorry, what do you mean? One, I think you're frozen on the screen. So is Dirk.
No,
Wait,
no,
Dirk's
I'm
fine.
just thinking.
No, you're not.
I'm
Okay, that was literally just you. it was tripping me out. I was like, good, Dirk.
No, so what I'm saying is markets are
sorry,
not
repeat that again then.
okay, so markets are not showing us that the markets are basically not a normal distribution curve. It has a left tail or a right tail. Now, when you have a trending market with that standard that mean price with the standard deviations, isn't that what we're seeing? Because the mean price is trending.
Yeah, the mean price. If we're talking about a lower time frame, yes, you. Okay, so for instance, this like the NASDAQ right here. So overall, you could go out to say like you can see right now this is the 30-minute chart. We are trending lower per the previous 120 periods. But if you go out to the daily, we're very clearly in a upward trending market.
So here you're going to say you're going to say majority of prices will be skewed, like the height of that bell curve or whatever is going to be to the right side. So it's going to have a long left tail, right?
You have fat tails, yeah.
Yeah. So
Fat
yeah.
tail.
So basically, the thing is the fat tail. So when there is an adverse market shock, right, which creates those tails. Now, that always tends to be to the downside, not to the upside. We don't tend to get like an adverse thing where all of a sudden GDP, the economy, everything has exploded overnight, and we're going to go and do 25% GDP this year from 4%, and everything explodes to the upside. Typically, it's some kind of adverse shock where to the downside we have an extreme event. So an extreme event might be, you could get 20, 30, 40, 50% drawdown in stocks in a day, 2 days, 3 days, a week, 3 weeks, 4 weeks, a month, something like that, 6 weeks, whatever it is. Very rarely in a mature, developed market, you're going to somehow get over 3 months the S&P being up 60%. It doesn't happen.
No.
So that's where you get those fat tails and the problem is that they're skewed to the downside, right? As far as your portfolio. So it's like a risk skew with that.
Yeah. Exactly that, yeah. Exactly. I mean, this is like, I think probably the misunderstanding when it comes to like theories, for example, like modern portfolio theory, or it's also, I think, on a mathematical side, at least when it comes to how do you evaluate the fair price for options, which the go-to model, there's the Black and Scholes model, which also assumes a normally distributed market. So where you have like the sides of the bell curve, of a Gaussian bell curve, they are like extremely rare. And actually, if you look like at the daily chart, for example, and you want to quantize how rare are those events, you would, from a mathematical standpoint, see something they should only occur like every 10 to 14,000 years. From a pure mathematical standpoint. Now, we all know that this, when we look at the financial markets, is of course not the case. I mean, just need to look at COVID, for
LTCM.
example, or LTCM, 1987.
That's the classic one. Yeah, one in what was it, 10 billion lifetimes of the universe.
Yeah, exactly. But it still happened, no? And this is because of those fat tails, because they are not normally distributed, the markets. So those large moves happen approximately somewhere between 10 and 100 times more often than they should, according to a normal distribution of the markets. And this is actually... This is like volatility, for example, clusters. So you have either calm periods that like cluster together. We all know that suddenly the market is like dead and it's like not moving at all. We have that in any market, sometimes for months at the end, even at something extreme like the crypto markets. Yeah, I remember very well after the bear market ended, we were like, like moving like on a dead line for months at the end, and everybody was bored out of their mind because of that. And then you have periods of high volatility, which are shorter, but they cluster together as well. And this is the effect you you just drew on your chart, LJ. Now, when we break out of a normal distribution, it tends to happen again and again and again. It's not very rarely just a one-time event. So these events cluster together. Otherwise, we couldn't have extreme moves. If everything just trades between bands of normal distribution. And I think if anybody can solve this problem and in a way that you can backtest it and that it holds up to the standard of scientific research and what is it called in English, like review of your scientific research, peer review, or what
Peer
is
review.
that?
Yeah, peer review.
You're probably in for a Nobel Prize.
Yeah, I was just gonna say that's the next that's the next economic theory problem.
And that's also the thing, like on lower time frames, that effect is not that prominent. On higher time frames, it becomes more prominent.
Yeah, and the trouble is, it's because all the information that you can take in is based on past events. So it can't. It's quantifying all of that based on past prior knowledge, and can't properly take into the future of a future event, which could be outside the. Well, it 100% is outside the data set, basically, right? Now, if the future event happens to fall within the parameters of the existing data set, you're all good. But as soon as there is a data point in the future that is outside the past happenings, then you're completely stuffed, right?
And you not only see that in financial market, you see that everywhere. If you look like at a population of animals, and you can pretty much, very much say like, okay, like the population should be like this or that in the future, until the point a new predator is introduced into the system. Then everything changes.
Like there's a chemical spill from a plant which kills one singular species, which is very obscure, of some type of fish or microbe, and then the microbe doesn't allow the plantation to continue feeding, which this other animal feeds off the plantation, which is this, and
and we call this black swan events when it comes to financial markets, but there are of course levels of black swan events, and sometimes you cannot even say where it comes from. I mean, nobody would have said like some bat that has been eaten half raw in Wuhan in China is going to
listen. That's not what happened, though, was it? That's not.
Yeah, let's not dive into
China virus.
But I will say,
you guys remember that press conference? That was amazing. Why do you call it the China virus? Because it comes from China.
Come on, you guys inject like what was that, bleach into our veins.
You guys can see how this is okay. So this is on a daily on gold. When we had that big break to the upside, and we've gone distinctly out, and now if this only has two. This indicator right here won't allow me to put a third on, but we can go just change it like that. You can see we're now pushing a third standard div, which is close to like 99 whatever % of the price action, right?
Isn't that ATR as well? We're basically seeing a type of ATR as well, aren't we?
Yeah, except that ATR does it on a parallel level, no?
Yeah, exactly.
So you can see this is encapsulated price very nicely. We have come back into the mean, and then we've ridden the one standard deviation to the downside of the mean, showing that clearly we're very much still in the uptrend, right? And we can go to Aussie dollar on the daily, and you see you've got these, the extensions. You can go to euro dollar, you can see same deal. That was the outside portion. So anytime you see these outside portions, these are major points, and you can take something like a swing trade or whatever. Same thing with the NASDAQ, as we've been running up through here. We saw that big break point, and you had a massive downdraft all the way to the other side. So if you follow that kind of these kind of trades, very, very fruitful overall. And you can see same thing after that, the downtick outside, we've come up and we've basically just ridden that mean price, but we haven't really pushed above, which is an interesting aspect to confirm that the NASDAQ continues to have sustained momentum. We actually need to get back above that mean price and actually start to make headway and at least have a touch of the one standard div above the mean price.
We have a question. I think we can move on, change subject. It's been a long, very good
Yeah, sure.
breakdown of how to look at this. I think it's a highly underrated way of analyzing the markets. But now to in question, is it okay to trade during Christmas season? I'm just going to go ahead and say no. It is not okay to trade during Christmas season. You have better things to do than to trade. And that's why the markets are moving so slow, because people have better things to do than to trade. We got hedge funds, we got institutions, we got the whole financial system is slowing down, which means less volume, less liquidity, less volatility, and then it picks up again in January, where we have the January effect as well.
I do not agree with this at all, because in my opinion,
What?
it's totally okay to trade in Christmas presents you don't like.
Ah, good. Nice. I like that. That's not okay. I don't think that's okay.
Make sure they keep the receipt, right? You can take it back and
Yeah.
get something else.
Yeah. So that's why you give the receipt with the present.
That would be a very German thing, probably. In case you
Right,
do not
yeah.
like your present, here's the receipt.
Yeah.
I mean,
No,
we
so,
do that here often. You know, you keep the receipt just in case, right?
Yeah, absolutely.
That it's a good idea though. It's a good idea to keep.
Well,
the
sometimes you
receipt.
get a double up because it is actually something that someone would want or enjoy, but they've already picked it up for themselves, and it's kind of like, oh, well, you know.
Yeah. Right. The January effect isn't that based on the fact that like end of the year traders are selling to do like a tax harvest on the losses, and that's usually small cap stocks, and then in January they buy back those small cap stocks again, and that's why you see like in a rally in small cap stocks compared to other stocks. I think that's where the January effect comes from, but I guess it also comes from the fact that people get back into the market after the
Well,
holidays.
there's one paying of bonuses, obviously, coming to end of the year, end of the quarter. There's also wrapping up the quarter itself as far as your record and that kind of thing. And then you come into January, everyone's got a clean book and they want to start the year hard and fast and try and punch that along, right? Yeah.
We have also a very interesting question here to Dirk. Have I missed something, or have you been talking about selling gold, Dirk?
Yeah. My system did a short on gold. So my automated system up here at 4,340. But I'm not going to tell you what the trigger is. This is, of course, highly confidential, and I would need to kill you if I share that information with you. No, I'm just
I
kidding.
know you can pay me. You can pay me. I can tell you. I know.
I can what?
No, never mind. Nothing. Don't worry. Don't worry about it.
No, it's a prop joke set aside now. Whatever this weird Swedish guy is talking about. So it's of course a proprietary indicator that I'm not sharing, other than the signals every now and then.
Oh, it's like, oh, I'm gonna sell gold. Look at this signal.
Right.
But you know what? I'm not gonna tell you anything more.
For the small fee of $9,500 per month,
Yeah.
you can also have awesome trading signals like this. No, I'm not selling this, so don't worry about it.
Well, speaking of shameful plugs, there is going to be a link in the description of this live stream.
What did I miss
for Dirk's social media? So go give him a follow, and if you're nice, he might give you some more signals, incomplete signals.
I was going to say, okay. Josh did have this question before. I did flag it, and he just asked again. So, what's your guys' thoughts?
Yeah, if you think if you have a trade copier and you have money to buy another account, I don't see a reason not to. I mean, the real money. Maybe I shouldn't say this, but I will anyway. Like the real money in prop firms is getting a copy trader and then scaling your accounts to the max and connecting as many scaled accounts as you can to the copy trader. I've seen some people do that on max funding, and it's all they're doing is just trading from a personal account, and then it gets copied. You have to be a little bit careful though where you have your personal account, because you can make sure that you don't trade on. I feel like I'm not gonna say the name of it but I did use a broker in the past. You guys know about it. Starts with O. It's a big one, and it didn't align with the prop firms at all, because it like Euro USD on the fibers have like somewhere between 0 and 2 in spread, right?
Yeah.
And that other big professional, biggest prop firm, like the biggest broker out there, probably had like 4 at sometimes. So I got stopped out, but not on the fibers, which is like, okay, I'm trading my personal account, I get stopped out, but not on the prop firm. So go with a broker that has good spreads.
It's so interesting. I totally understood this question in a different way. Like, does it make sense to have multiple accounts to test like multiple strategies as well to keep things like cleaner? Not from
what? I didn't.
I'm so greedy and I want to maximize my profit, Jonatan type of perspective.
Yeah, I was going to say, I reckon you should run different strats initially, or at least 2, and then you can start to hook up, extras to the same one over time. I think
people
I
don't
think
even
it's good
have
to
a profitable
two running
system.
side by side that are very different, and they run off different things. Maybe like a swing trading type aspect.
Maybe a standard deviation.
Yeah,
I think what you want to do in trading, you want to specialize. You don't want to, because chances are that you don't even have a profitable system today, and now we're talking about having 2 systems. So I think we want to specialize. Focus on trading one style, one system.
I think they can complement each other though, right? Because then you are looking at both frames of the market, right, from a swing and a real-time, now-time perspective. And then I think that can help you not get caught out so much in the real-time stuff, because you've got the longer-term perspective as well, and also not try to get, FOMO'd out or FOMO'd into a longer-term swing trade because of real-time stuff here. So I think it can be complementary as well. But overall, I think just adding more accounts in general, regardless of all that, essentially what you're looking at is just expanding your overall capital under management per se, right? So definitely makes sense. Definitely add it if you've been going well. You've been knocking out the park, that kind of stuff, trading well. Yeah, sure. You're expanding your capital base, and obviously, if you've done well prior with the other accounts, you deserve to expand that further. Right?
Also, what I've seen is that a lot of people start adding accounts when it's going well. So when everything's going well and they feel like they're trading well, they feel like now it's time to add more accounts. And usually you'll see that that's going to be the top, because they're confident. So they're very confident, and I'm going to start adding accounts. Let's address the elephant in the room. William, what are you doing with your microphone?
What are you doing? I think he wants to stop training and get into professional beatboxing.
Oh no!
Yeah. He's doing ASMR. Dude.
I'm sorry, guys.
Thinking of the buttons, right?
I thought I muted it.
Yeah, no, not at all. That's wonderful. It's like,
oh, guys, I'm sorry. I thought I muted it, and I kept knocking my mic every time I went to sip my coffee, and I was like, for God's sake, this is annoying me. I'm gonna just flip my mic upside down so I have all this room underneath, and I'm knocking things, and then I can probably put it like closer to my mouth as well, so you can hear me a bit better. And I thought, oh, actually, this is a really smart idea. So I flipped it around, and I'm loving it because I can see my screens better. And I can go get my coffee and use my mouse.
Oh, you mean you had it flipped so the red color was up?
Yeah.
Right.
I didn't flip the other way around.
I think you're supposed to have it that way.
Are you?
Yeah.
Is that really?
I don't think so.
It's meant to be the other way. Technically,
I
don't think it really matters.
Using my mic wrong for all these years.
Yeah,
as long as you have
I'm using the correct mic.
Yeah.
Okay. I get what you're saying, but it looks better though. That looks better.
The mic. Yeah. So I got so much more room underneath as well.
I think Richard is trying to speak as well.
Oh, Rich, you need to turn your mic up. I can't hear you.
You need to turn your mic upside down, Rich.
I don't know how to turn mine upside down.
I still cannot hear you.
Can you not hear me?
Oh,
Now
no,
we
we can
know.
hear you now.
No, I
Yeah,
can
now
hear
we
you.
I did
That's a good
nothing.
point.
No, because I think like Jonatan's mic is louder than yours because it's upside down.
Ah.
No, I'm just
It's
screaming.
upside
Honestly,
down.
I'm just very loud as a person.
Now I'm saying that it's a condenser mic. So a condenser mic has an input side. So it doesn't matter if it's upside down or the right side up, so long as the condenser's audio face is towards you. So do it upside down, mate, if you want to. But
it's
Will is
not
going
about
to
that.
say, yeah.
It's about looking more cool and more like a professional podcast.
I was going to say, guys,
streamer.
this is, I feel like I'm in like a proper recording studio. I feel like I'm going to go drop a single.
Okay.
I was just about to say that. I think you're the next Slim Shady.
I, I don't know
Yeah,
about
with
that.
emphasis on shady.
Maybe you're shady.
Shady.
I was going to say,
Oh, God.
in the moments, I suppose.
We go
Next
Will,
Biggie
Will
Smalls.
Shady.
Yeah,
Big-
Will Shady.
Yeah.
Big Willie. There you go.
Okay, let's drop it. Like, let's just end it
This
all
guy
here.
for me to go
That's-
off and
move
have
on
fun,
from
I think.
Anyway,
Oh.
guys, how are you?
Yeah.
Again,
Oh, we're good.
sorry
we're
about
good.
the drums that I was fiddling
Yeah.
about with the mic. I thought I had muted it, but apparently not. So, how are you doing, guys?
Doing well.
Great, doing great.
Good.
Pretty good. Yeah,
Awesome.
well,
Any trades today, or
Long
think
euro
we have a-
myself. Long Aussie dollar.
We
There
get
you
a
go.
question here that I want to address before I leave. So, how do I suppress the urge to trade when there's no setup? I feel that's super bad right now. So, I think so. What's happened right now? You're not trading, are you? Like, let's be honest. You're not trading. You're addicted to the adrenaline that comes after entering a trade, aren't you? Like, you're addicted to the idea of random rewards. You're not trading. So, what you're doing is, first, you have two personalities, right? You're a trader that takes the right setups, and then when there's no setups, you go into this addictive, adrenaline-seeking person, and you're like, I got to be in a trade because I got to feel that feeling. That's a problem, right? That's a problem. So if you can't deal with that, then you're not trading. You're gambling. Okay. So ask yourself: do I want to be gambling or do I want to be trading? Then just be honest with yourself. Do I want to be do I want to be gambling or do I want to be trading? And then if you want to be trading, then step away, do something else. Don't look at the charts. Don't look at the screen, and try to figure out where that stress comes from, because it's most likely it's stress. You're getting that stressful emotion, and you want to want that adrenaline. Go out on a walk, touch some grass, do something. Don't. You know what? Like, don't watch us. Just go out, go on a walk, take 10 minutes, think about something else.
But,
Then come
but
back
to,
to
I would
be
say-
fair, everybody has been at that point in the beginning of
Yeah.
their career, and it's also nowadays very easy to fall for that trap, because this is exactly what most brokers are advertising for. They're
Yeah.
advertising gamification and not professional trading. They're advertising the clickety-click action, because they know if I click on buy or sell and have maybe, because I got lucky, some quick wins even, this is going to set off something in my brain. I get a dopamine kick from this. So this is also why it's so hard to go back and then start actually treating trading like a business.
yeah,
It's I would say it's very they want to do that gamification kind of TikTok Reels type thing.
Yeah.
Engage.
Mhm.
But I would say view it the same way as like you got to treat it as a business, as a profession, and think of it more in the same way of like if you were studying some kind of say you're at university or college or whatever, right? You haven't read a textbook in 2 days. You don't have this weird hungering to go out and just read a textbook or something. Or the same way, if you're a lawyer and you don't have, work on your table, you don't go out and randomly sue someone just to
just
be a
because you
lawyer,
want
right?
to.
Just because, oh, dude, I really need to
That's
sue
good
someone
good
right
business,
now, right?
though. It's good
Oh,
business.
I really
That'd
want
be
to take
enough.
someone to court.
No, I have a picture in my head of me going out and some stranger approaching me. I'm going to sue you.
Yeah, that would be
Yeah.
insane.
Why? Because I'm addicted.
Yeah. See, that would be
Cost like
nuts. That would
10.
be insane. So you got to draw the same parallel there to trading, right? You don't just go out and randomly sue someone like because you're bored or something, right? Like just like Jonatan said, you step away, go do something else. You actually go, oh wow, I don't have to be suing someone and dealing with a lawsuit right now. I can chill out. I can wait for the next client piece to come through, and then I'll work on it. And just take it as it
in
comes.
2017, I believe, I had a trading mentor, and I had this exact same question to him. And the answer, the solution, he basically just told me, how about you just act like a F professional? And that kind of stayed with me because when he said it, I'm like, yeah, maybe I should just try to act as a professional instead of just taking random trades without no plans and just trying to gamble and bet. And that kind of stayed with me because that was so real and honest and true. And I'm like, yeah, okay, you know what? I'm gonna act as a professional. I'm gonna go out. I'm gonna take a walk. I'm gonna meditate. I'm gonna come back and I'm gonna make the right decisions.
Yeah,
There's nothing else to it.
Do some training, do some prep, go over your past trades, that kind of stuff. So the same way, if you're again using that same similar analogy, like if you're a boxer or UFC, right, and you don't have a fight on for another 3 months, you don't go out into the street and start fighting someone, right? You go back to the dojo and you keep training and leveling up your skills, your ability, but you're not trying to fight someone. So that's when you do the work of looking over your past trades. Are you making sure you've got everything in line? You're in the pocket, all that kind of stuff. Is there anything that you could work on to develop things forward, to improve, to refine some of the, the entries, reduce what you're paying commissions or something? You entering by market? Would it be better for you to run limit orders or something like that? Or, all these like tiny refinements, that's what you use that time to do. That is part of the work. You don't always have to be trading. Part of the other work is actually doing the research, the refinement, that kind of stuff to your strategy, whether it might be informing yourself on macro fundamental stuff, planning for the future. What are you actually trying to get out of this? All this random scaffolding around the actual execution of clicking a mouse button that comes into the piece as a whole.
Trading is too simple, isn't it? Like it's too easy, and that's an issue, right? I mean, it's not easy being a lawyer because you have to actually become one. You know what I mean?
Yeah.
Well, okay.
Guys, I gotta make a move. Lunch is calling, and
me too.
As always, has been a pleasure. And
yeah,
we're still going to see each other next Monday, I think. No.
Yeah.
Oh, wait, no, the next Monday is the event, no?
No, next Monday is the big event, and you're not invited. I'm kidding.
I'm not invited.
I'm not only, and you are, my friend, not effing invited.
I'm just invited for an hour. Okay, I thought I was going to be there for hours, but they just want me for an hour. So
okay.
That's all that I can deal with in the world of Jonatan.
Yeah, that's all they can take from me. Dirk, it's a pleasure.
To make up for that, you're going to see me on Tuesday then.
Oh, okay. Good. Looking forward to that.
There we go.
All right. Take care, guys.
All right.
Bye-bye.
Okay, man.
Bye. Have a great one, mate.
What's for lunch?
Well, sorry, what?
What is for lunch?
Today it's chicken.
No.
Isn't it always chicken?
I don't believe
it is always chicken, yeah.
I couldn't have guessed that. Even if I had 100 guesses, I would not have guessed chicken.
No,
I don't know. I reckon I would have got it on maybe the 50th or 60th guess. I would have had to have
No, man, it's chicken, everything. Chicken, just chicken. Chicken.
Even if you said to me it was
chicken, everything, dude.
I wouldn't have guessed it.
I have a question.
You need to raise your own.
Do you ever get tired of chicken? Or is that just like you get excited for chicken?
So much you can do with chicken, though.
There's so much you can do with chicken. Yes. There's so today I got chicken tikka masala, right? That's very good, very nice.
Oh, I love chicken tikka masala.
And then and then tomorrow I got chicken fillet, cut it up, and then you fry it with onion, and you put some paprika in, and then you have cocoa milk, and then you have just a lot of seasoning and shit. Like very good stuff. So there's a lot of things you can do with chicken. Like you can basically do everything. And then you have sliced potatoes, you get mashed potatoes, like everything. It's chicken, potato. If you have chicken and you have potatoes, like there's so many different things you can do. It's just amazing. You can ground it as well. You get ground chicken beef or whatever, not beef, ground chicken. And then you can do chicken balls. Like you can do everything. You know? There's a lot of different things.
Did you just say
Different
borscht?
balls.
Balls.
Oh, chicken balls. I heard
Chicken
borscht.
balls. No.
He's
I don't know
Swedish,
what that is.
right?
Jonatan, you make cooking chicken
Yeah,
come
yeah.
to life.
I make chicken come to life, yeah.
You make cooking chicken
what
come
it-
to life.
Chicken was alive, unalive the chicken, and make it come back to life again. Jonatan
He's the new
was
colonel.
a necromancer,
Right.
it would seem.
What I like doing is taking the whole chicken and doing something with it, but it just takes a lot of time and then it's a lot of work. And you don't get a lot of meat, but then you're stuffing a chicken, putting it in for an hour, low heat in the oven, and then that's good, man. Good stuff.
Hey, Jonathan, your future trajectory is CEO of KFC. It needs to be.
100%. 100%.
He's the new colonel. Right? Colonel
But
Jonathan Randon.
But the question is, does he actually like KFC?
Nah, KFC sucks. I would never put my foot in a KFC. Never.
Ergo,
They
that
don't know how to.
means that you're going
He's
to
gonna
be the
become
new
the new-
CEO
it's gonna
of
be called-
Burger King or of McDonald's.
No. It's going to be
They're direct competitors.
JRC. It's going to be JRC, Jonathan Randon Chicken.
Yeah, JRC.
Oh,
Dude, okay, one of the things, if you guys come to Australia, apparently Australia has the best KFC. So, like, Americans come here and
I'm
they're
not
like,
going to lie.
dude,
I'll take
your
your word for it.
KFC is not our KFC. Our KFC sucks. Your KFC is good.
Dude, I don't know if that's
KFC
like
here is
bragging
good.
rights or anything, because it depends. It's like, it's KFC measured with KFC. KFC sucks, mate.
I was going to say.
When you come here, you'll realize that KFC does not suck because I guess we use the chicken here, obviously, because we're halfway around the planet and we got food.
No, I thought you used British chicken.
Nah, dude. KFC sucks.
Yeah, I don't like
Right,
KFC.
come here. We'll go to KFC and you'll change your mind.
Dude, I'm so okay with just leaving you have KFC.
See what I mean?
KFC
See
can
what I
just
mean?
like stop existing, mate. In my opinion.
Oh, come on. Oh, come on.
No, they
I'm not
actually
a big,
opened-
I'm not a big believer in those, though. You know, like I don't like KFC. I don't like Burger King. I don't like McDonald's. I don't Subway. I sometimes I don't mind.
Subway
Subway
is
is
pretty good, yeah.
trash, dude.
Subway's not. Yeah, it is trash. But
What are
it's
you
the
talking about? How
it's the
Subway's
better of
trash?
both
What are you
evils, yeah?
talking about?
It's the
Yes.
better of
Wow.
all evils.
Okay,
Dude,
I've had
expensive
food
sandwich.
poisoning
Someone's making fun of you.
5 times in my life, right? 4 times was from Subway. It's always
Yeah, but that's
from
because
Subway.
Subway, where you eat, sucks. Obviously.
maybe that. Who knows? But
Do you know what I blame
at
that
least
for?
the KFC
I,
is good.
do you know what I put it down to? Poor immune system. Go eat
Yeah,
some dick.
yeah.
Go
You're
eat some
one
dick.
to talk, Will. You're one to talk.
You're talking to a guy from Australia. Poor immune system, dude. I'm pretty sure our immune system, survival system, everything of that, it's been very well crafted over
I mean,
decades.
fair. No, I mean to be fair.
Stress from the environment.
Are you Aussies like super paranoid people? Do you like hear like a scutter and just like, what is that?
No, it's more the opposite. We hear a scutter and like, oh, whatever, and then randomly there's some animal in your house, and you're like, oh shit.
Yeah,
So what?
looks like I could die.
Yeah, you're like, oh well, that's cool.
I did see never mind. I'm gonna leave. I'm gonna have chicken. Have
Okay.
fun, guys.
All right.
Go enjoy
See you,
your
bro.
chicken.
I'm gonna leave.
Have a great
Ciao,
one.
Subway
Jonathan.
Subway's good. Take care.
Rage quit for Subway.
Subway
I-
is
I-
mediocre.
I did just want to finish answering Josh's questions because he was engaged with this. So, yeah, man. So, if you're not going to trade, like copy trade the accounts, I think that's completely fine. That's what I do with the majority of mine as well. I still trade them individually. I have a couple that are linked up. So long as you don't find it somehow detrimental to whatever approach you're trading, that you got to tab between certain things and keep especially if you're trading different assets, etc., on the various accounts, as long as that's not going to disrupt you and somehow you're now losing alpha on your primary account because you're being distracted trying to manage the trades, which might be at a different size, different assets, all that kind of stuff on the other account. So long as that's all fine and you're all right with just swapping between and it's not an issue for you, then no problem. You can trade them separately. I even with a copier, kind of like what Jonatan was saying, is that I still generally prefer to trade them individually. I've tried using some copiers, but it's very hard that you do have to get, like Jonatan was saying, whatever the primary account needs to be very close to the same spreads, commission, everything of the sister accounts underneath. Because otherwise, the primary account may get stopped out or even filled, whilst the other ones did not. And then that can really disrupt things because you think you have an order from the primary account that has gone to the sisters and it hasn't. Or the primary account has been stopped out or taken profit, and then the sister accounts have not. And then that means you're going to have to keep an eye on them, where one can be, you might even be in 0.5%, 1%, 2% profit, and then the others have had floating, but they haven't quite hit TP. Then you've had news come out after, and price is drawn right back, and now all of a sudden the other accounts linked are down 2%, right? And that can be a very big differential and just trouble, and makes it very hard. So, but if you're just running the two, then that should be simple enough to manage yourself.
Dude, I love copying my accounts over on a trade copier. I love it. It's so much less stress. I much prefer to do that. Unless they're MT terminals, if I'm trading MT, then I will trade a maximum of 2 separate accounts. I don't want to trade anymore. Like let's say I have 100k with one firm, 100k with another, or maybe 100k with one firm, like with the fivers, for example, 100k and a 60k. That's okay. I don't mind that because I can trade both accounts. Like I can multitask that. The minute, like I remember when Traders Connect went down for a bit, I had MT, I had C Trader, Trade Locker. What else did I have? I had one more. There's DX trade and a DX trade, and I was like I had one screen dedicated to terminals, and I divided them into like 4 to 6 screens, and it was just multitasking, and I felt like I was having to skip while juggling, also whilst on a unicycle somehow. It was just too difficult. So for me, I don't mind 1 or 2, like 2 of my most important accounts. I'll trade individually, preferably on MT. However, I will trade the rest, and then I'll divide my portfolio into 2, and I'll put them on the back of both those accounts. So, for example, if I'm trading a 60k with the fivers and 100k with the fivers, I'll have 100k, and then I'll have half my portfolio on the back of that, and then I'll have 160k and the other half of my portfolio on the back of that.
Yeah, fair.
I
was going to say, Josh, just as a side thing, dude, you're Australian. Where are you from? Let me know. Tell me. It's good. We have quite a few Aussies in here, I must say,
dude,
all the time.
Look at EU.
Yeah.
EU just missed me. I'm just completely rallied up.
Dude, I'm loving it.
I bet you are.
Look at
hell
this.
of a trade.
This is
Dude,
prime.
you're in an awesome trade. Look how close this was. It was, let me find, half a pip. It was half a pip.
Oh, before you got tapped in. You didn't get tapped in.
Yeah.
Oh.
I didn't get tapped in. I got missed by half a pip.
I see that. Oh.
Let me see a GU. Let me see if GU has moved yet. Because I know that GU... My terminal's been slow today for some reason. Because I missed this earlier on. It was a little bit tragic, but I just didn't get onto the terminal quick enough.
Yeah. And I was just going to say, Domsey, we'll answer that in a sec. I'll be back in like 30 seconds, and then we can get into it. So
Yeah, G was really nice. We had that perfect sort of break and retest. We had that break and close above, a really nice bullish break and close above as well. It was stunning. And then we had this pull. Oh, everyone's gone. Bye, guys. See you all later. My God. I'm joking. It's fine. Go. No, it's fine. No, go away. No, be gone, Rich. Go. Shoo. I'm joking.
Okay, child, have you done having your little tantrum?
No, I probably still got. I still got a minute or two. I reckon. I still got a bit bottled up. It depends if I lose my next trade. I'm sure I'll have another one. But gee, my terminal's really slow, and I don't know why. There we go. So my trade, I wanted to be around here somewhere. In fact, let me get my fib out on this. Oh, this would have been beautiful, man. This bull candle here. What's going on? There we go. There we go. So yeah, we've got this big bullish engulfing, pull back down, double wick, onto the break and retest, into a fair value gap, or as I like to call them, an imbalance, into my golden zone on my fib, le bosh. We could have entered in here and followed it up. So if we break and close above this, which we haven't done yet, then I'd like to see what happens on GU. Hopefully we can buy up on GU. Also, guys, by the way, you're probably looking at this thinking, how has Will lost like 90% of his capital? This, my fantastic Fivers friends, is a 5% account. It's a Fivers account, $10,000 phase 1. You guys decided for me. I wanted to come up with a personal account, a $100 personal account, and see if I could turn it into like $1,000. But I thought, you know what? Let's leave it to chat. Let's see if chat can decide what they want to see me trade, whether it's a $100 personal account or a $10,000 Fivers account. You people decided, and here I am. The poll stands at. It was close at first. It was close. It was about 50. It was about 40-something% to like whatever 50-something%. It was super close, and in the end, it was just like 30-70 to the prop account. So I thought, all right, sweet, awesome stuff. This weekend, I went and got myself a $10,000 Fivers account. Here I am trading live. I'm going to call it my fun account. It's my Christmas account. You know, like I said, I'm going to see if I can pass this by January. If I can't pass it by January, then oh well, maybe I'll put it on the copy or something. I don't know, but if it's either going to pass or it's going to fail. You know, there's going to be some high risk trading going on. I'm risking about 2% per trade. I lost 1% today. So, well, 0.9% I lost today. I'm not going to disrespect the account. You know, I'm not going to be like, oh, full margin. You know, I'm not going to be an idiot. I want to pass this account because if I can pass the account, I put it on the trade copier on the back of my 100K account, my live account that I trade throughout the day, and then it'll just be an added to the portfolio. So I want to look after this account. I want to, you know, genuinely trade high A+ setups. However, it's going to be a little bit more risky. It's going to be, you know, I want to trade an account and I want to have a proper account, skin in the game over the Christmas period, but I didn't want that to be my Fivers 100K account. So here it is, my 10K account, as you guys requested last week or last Friday. Oh no, last Thursday. Sorry.
So I'm just getting my caffeine in form.
Dude, I had a Red Bull the other day. My first Red Bull since... In fact, the last time I had Red Bull was on stream like 2 weeks ago. And it was so yummy. There's something about Red Bull. I love it. But it's just too bad for you, so I don't drink them. However, I have made another fantastic coffee. I don't know if you can see it. No, you can't. I've made a yummy coffee.
Nice.
Oh, okay. So you're from Perth.
Perth.
There you go.
Fair. Nice weather.
Good eye, mate. Put another shrimp on the barbie.
Jesus Christ, Will. Jesus Christ.
Sorry, man.
We can dress you up, but we can't take you bloody anywhere, mate.
Oh,
I know.
that's so funny that has become such a meme. Like
I don't know
overseas
how
over there.
either. Do you actually put shrimps on Barbies? Is that a thing? Do you have
No,
like shrimp?
and we also don't call them shrimps. They're prawns.
Oh, okay. You call them prawns as well. Maybe it's
Yeah,
just
Yeah.
I don't know where did that come from then? Where did
It was a marketing thing from an ad directed towards the US,
that makes sense?
Right.
Yeah, that makes
and
more
then
sense. I was
it
gonna say, 'cause
kind of
I know
stuck,
the
and
Americans call it
then
shrimp.
yeah, and no one's putting them on the barbecue either. Like you,
It's
you
not a
do cook them,
barbecue. It's a
obviously,
Barbie.
but then you put them on ice, and because dude, it's hot over here, right?
Yeah,
Yeah,
and you're supposed to have them in like a butter sauce, so you wrap them in foil, and then you have them cook in
Yeah,
that
garlic
on the fire if you
butter.
want to put it on the
Oh,
fire.
I don't typically like shrimp, but dude, on the weekend I went to a I don't know, lunch, whatever thing with my partner or whatever. Rich, do you like prawns?
I like prawns. Yeah.
I assume you do. It seemed like you. I will send you a photo. They were the fattest prawns ever, and to the degree where I'm not the biggest fan. My partner is definitely. She ate all of them. But I'll send you a photo. They were
Massive.
pretty special. Yeah, pretty amazing.
Dude,
So,
I love prawns. They're so good.
yeah.
Yeah, so when it comes to sushi and stuff like that, I'm more of a salmon person. I sometimes I'll have tuna if it's like a hand roll or something, but when it comes to prawn, I'm not the biggest fan of steamed prawn. Steamed prawn to me is like very mediocre, it's very mid. But
Yeah.
a like peri peri and butter mixture, and then just a little bit of like flame grilling it. Oh, mate, so good, so good.
Dude, anything slightly seared or charred?
Just a little bit. Just
Yeah.
mwah,
Dude,
chef's kiss, mate.
I'll take
Uh,
anything from the sea, man. I love raw fish and just cooked crustacean is yes. I could live on that. I could survive on that.
So
we
good.
do crab curries as well.
Oh, interesting. But wouldn't that take
See-
away the flavor of crab? No.
I mean,
Crab
like,
is
a curry
pretty
takes
similar
away
to me.
most flavors of most meat because it's so intense. But
Yeah.
like a crab curry will have still that crab-like quality, enough so that it's not overpowered by the spices that you add to it. And you can also like the amount of spices that you add to your curry, you can also control.
Yeah, fair. So it's
Yeah, I feel like
hot
crab is pretty similar. Like I'll be 50-50 depending on how it's put together. Put it that way. Like some portions of seafood I love, and others I'm just like, no, I'm out. Right, I'm out. So it's very split for me. I either love it or no chance. Right, like octopus, that kind of thing. Like
Dude, I was working out in Mallorca a few years ago. I had octopus then. That's the first time I had octopus, and it was stunning. Thing is, if you overcook it, though, it gets too chewy, like really rubbery.
yeah, it's not in my realm. Not in my realm. But yeah, going back to this after because I said when we came back we'd cover this. So was it perfect setup for overview of the market? How many screens are you using and time frames are you using for your perfect overview setup? And which instruments do you focus on? And there were some follow-up things to add to it. So we'll say multiple time frames, multiple markets. What's your best setup for a general overview? And then would be nice again, answer, definition overall, not to get lost, and how to adapt, like having 1 to 2 charts free for short possibilities, etc. So I guess basically it's like how many screens do you guys have? What are you focusing on? What time frames primarily, and what assets as a general collective to find your positioning or overall direction for market temperament for that day?
You want to go first, William?
Yeah, sure. So I mean, overall view of setup, like how many screens, I only have technically 2. I have a big 49-inch curved screen monitor, and then I have a 34-inch monitor above it. I like to divide my 49-inch into 2. So I'll have like my terminal here, and then I'll have maybe my trading view or my streaming software on the left, and then I'll have my news and my data, my analytics all above me. So what I can do then is I can like trading view, so like analytics, and then execute, analytics, execute, journal, execute. So I always have my terminal on my right hand side. However, then if I'm, for example, messaging people on WhatsApp and all, I can just flick between like that. That's like my gamified, like my sort of social side of my screens is above me, because I'll have it like slightly back, so it's not quite in my eye line. That's how I like to use my setup. I come to the charts straight away. Forex Factory goes up on my top. Then I open up Trading View. Then I open up my terminal, and then I just like to do a bit of a top down and make sure that my terminal is matching my Trading View. Make sure all the data's aligned. Make sure there's no news out for the day. And then if I execute a trade, I'll usually then drop my my news. I'll drop my news and then bring up my journal, and I'll usually play straight into my journal, so I can analyze, watch my P&L and journal all in one place, and then I can go walk away, come back, etc. Set my alerts, and like I always have my analytics, so I don't like to be flicking between bringing up and bringing down. That's how I save myself from getting lost, and how I sort of adapt my sort of strategy in trading. 1 to 2 charts, 3 short possibilities. I don't really split screen my my terminal, so like I won't ever do this. In fact, hang on, where is it? Where's the button? There we go. I won't usually do this because I find, unless I'm, oh shit, what have I done? That's why I don't usually do it. I've just opened up a position. I don't know where. Oh, okay. I've done it up here for some reason. Right, which one hasn't got a stop loss? Okay, that one hasn't got a stop loss. Right, I'm out. For that exact reason is the reason why I don't like to have multiple terminals or multiple screens up on one terminal, solely because mistakes are made. You can cock up, fat finger, put the wrong order on the wrong terminal. That's why I like to just flick between at the bottom here. Now that saves myself from getting confused. I think that's pretty much all you asked, wasn't it? Yeah, and just keeping things simple, keeping things really easy to see and easily displayed.
What do you do, Rich? What's your setup for this?
So generally for me, I've got 2 screens. I have the screen that is right in front of me that generally has either one of my main accounts, and then behind each one of those accounts would be my secondary accounts that's hooked up to my copier. And then the screen that's in front of me would be Trading View, my stream account, and then my news calendar. So I primarily focus on either looking at the stream account or the Trading View screen. And then in general, if you bring my screen up, I can show you just very quickly.
Yeah, sure.
In general, I'll have a split screen, and I'll have my focus bar on the right-hand side with the pairs that I am trying to focus on. And how I would normally go about it is, when I'm doing my morning analysis, trying to kind of like choose a pair that looks best for the day, I would have a look at what the changes were on the right-hand side in relation to what the current price is, and then I would start at one of them. So I will start at EU, have a look at EU, and if I don't like what's going on in EU, I will try a different one, UJ, and then have a look at UJ. And I tend to hop between 2 price points, not price points, time frames. I tend to jump between the 5 and the 15. So I'll have both of them on the 15, both screens. So let's say hypothetically I'm looking at pound and I'm interested in buying or doing something on pound. I'll keep it on the left-hand side, and on the right-hand side will be any other pair that I'm trying to look for a trade or something like that. I'll look for there. If I find an account, or not account, an asset that I want to trade, I will go over to my terminal, and I will then look for whichever one. So whether it's pound, gold, NAS, whichever one, it'll be here. But normally it would be like this. I'll have them completely split. And then I'll choose, okay, NAS, I want to enter NAS. Then I'll make it full screen. I'll look for my entry point exactly where I want it, and then I will go ahead and take the trade. In general, I do not focus on more than 2 assets at a time. While I'm waiting for the one, generally another one might be moving, or if my focus is too split across too many assets, I kind of do the same thing what Will was talking about. I'm not having a look here to see, okay, I'm on NAS here at the bottom. I might be on gold, and I might not be paying attention to this, and I'm already like prepping, to enter. Okay, it's going to be over there, and my analysis was done on NAS, but then I accidentally enter on gold. So I try and limit that as much as I can. This is overview along with trading view, overview, and then once I'm ready, focus, come down, focus on the one that I want to trade, and then I go about prepping to enter the trade. That's generally how I go. So it's the simplest way for me as well. And then Will was talking about accidentally entering by pressing that buttons at the here at the top.
I literally actually did it as well. I was like, oh no.
Yeah.
Proof
I for that exact same reason, I removed mine, and then I added the position sizer, because you can't accidentally enter, because you need.
Yeah,
you
I
can,
think I may do that.
You can say ask for confirmation. If you accidentally press trade, then it's going to ask you for confirmation. So.
Yeah. And so time frame wise as well, you're typically looking like a lot of time frame, like 5 minute, 15 minute, sometimes 1 minute if you need it. Kind of like real time.
All the way down.
Aspect. Yeah. Okay. Yeah.
But like focusing for entry points, it's the 5 or the 15. So I'll jump between the two. I'll start the morning with a rundown from daily, week, daily, 4 hourly, 1 hourly, half hour, 5 minutes. I'll work all the way down. Find one that looks good. I like the way that it's moving. It's consolidating. I want a breakout. Okay, cool. I'll focus on this one. Oh, there's the break. Okay, let me wait for the retest. It's retested. Okay, cool. Is it retesting on the 5 or the 15? It's retesting on the 15. Okay. Have a look. Wait for my rally-based rallies. Okay, there's a rally-based rally on the 5. Enter. So just a simplified way for me. It works well for me. I don't know if it's going to work for Will.
What's your setup situation like? How do you go about keeping your setup simple?
I'll show you guys. Hang on. So this is my personal broker stuff, I'll say. So this is IG. So I have these guys that I always have on so I've got euro dollar up here, Aussie dollar down here, pound dollar in this corner. I've got the dollar index, and then dollar yen up here. Now you can see I've got various tabs with dollar mex, bunds, gilts, that kind of stuff that I tab between, as well as like tech, like indices, like the NASDAQ, the S&P, that kind of stuff. I've got some of the tangential assets. These are all on a 1 minute. They always sit to the left of me, so I can see them all in real time. Basically, what I'm looking at is the correlation between euro dollar, Aussie dollar, pound dollar, dollar yen, and then the index itself. Right, dollar index. And our dollar index, I'll also tab over to the indices for stocks as far as a risk on, risk off type asset. Then I've got like things like gold. I've got over here the 10-year note for the US, right? And I'll tab between these to get an overall picture of dollar direction, risk on, risk off characteristics. Now I also have another personal broker, which is CMC, and I've got these guys, similar deal, euro dollar, Aussie dollar, pound dollar, dollar index. These are on a 5 minute, and then a 15. Right, so up here I've got the dollar index and tech on 5 minute. I'll tab between them, and then if I just quickly shift this around, obviously for you guys, I always share this guy, good old Trading View, which I've gotten used to using because I did not used to use in the past. So beyond that, then I'd have my MT4, MT5, whatever terminals. And then I've typically got the similar assets but on a 15-minute with various other indicators. I've also got C Trader, also tab 2. C Trader, I typically look at the longer term timeframes of like 1 hour, 4 hour, daily, weekly, that kind of stuff. And that's got a lot of backlogged structures, that kind of stuff from the past, 10 odd years of trading, right? Because it's cloud based, that kind of thing. So that's pretty much what I have as the real time stuff to my left. I got my main terminal I'm trading off being MT5 for prop. Obviously, the personal brokerage stuff I trade off there. And I've got C Trader as well, personal broker, which I trade through IC markets. Have stuff set up there. So I take quite a wide look, both at the real time stuff to my left, plus having the 5-15 minute type trades for intraday stuff, as well as similarly to Rich was saying, you go over the 1 hour, 4 hour, daily, etc., to get the overall direction of things. So that's kind of how I put stuff together. There you go.
Nice.
Yeah. And then to the right, I always have data, I would say. So stuff like financial juice, financial data, news releases, that kind of stuff. To the right of me, I can keep an eye on Bloomberg, that kind of stuff in the background. Yeah. There you go.
Yeah, I like that. I
Rich,
like your way of doing it.
Did you put it in experts or did you put it in indicators?
It's supposed to be in your MQL5 folder and then experts.
You checked in Legend or some stuff.
I mean, you can just literally go to the website and you can just read the how-to.
Oh, they got that. Wow, interesting. I just downloaded it straight up.
So for everybody that's wondering, we're talking about the position sizer EA. Yeah, you drop it in your experts file, mate.
Yeah, fair.
Extract, drop it in, refresh in MetaTrader, and there you go.
Oh,
That is bright.
nice.
That is bright. Woo! So for anybody that was wondering, it's this position sizer tool. This one.
Yeah, that was close
Probably
enough.
not see it all that well.
I don't want to end up doing that again.
Yeah. Yeah, it's thanks to Victor. Like Victor was the one that put me onto the position sizer.
Oh no, really?
Yeah, like
Oh, sick.
if it's good enough for Victor,
100%. I was gonna say, Victor's a legend one.
if it's good enough for Victor, it's good enough for me.
Right, let's have a look. Add.
I was in a NAS buy, but I have closed it.
Interesting. Where'd you get in?
I got in at the top of the Tokyo session as it broke above. So I had this section down here coming into the day. It was struggling to really break lower than this point. And then we had the high point of Tokyo, which technically it just kept hopping in between. And then I just waited for a break and close above, and then waited for a rally-based rally. And it was on this... there we go. On this candle over here. It was rallying after attempting to push lower here. It's breaking a new high, or at least it's making a new high, so you're breaking structure. And then a reattempt to push lower, it fails, and then it shows it wants to start pushing higher. Into there, very, very, very little drawdown. Just this one little wick here, basically. And then from there on, it just continued. And I've closed it.
Ooh,
Yeah, that's good. I like that. I was saying earlier I missed the entry on NAS when we were talking about it before. I didn't see it, but that was very clean piece right there. I think we could see further highs. But like I was saying with Dirk and Jonatan, I'm somewhat dubious of the Santa rally / continued progress right now. I think we will get general chop to the upside, but I'm just very, particularly with intraday stuff, to put the throttle on, per se.
Yeah, so I was initially aiming for this. If I go down to the 15-minute, you'll see it. There's a base over here on Friday where price slowly trudging, towards the downside, and then we got this volumetric down push. So I was aiming for this. I don't know why it's red though. Not supposed to be red. But this was a 15-minute bearish base. I was initially aiming for the midpoint of it. I wanted it to, really break through this to show that it was going to push up. But I also had this, the last swing attempt before the closure of the New York session on Friday, which was this little box over here, which is basically where we have now come to. I'm going to make that a high just so that, high is the red one. Let's make it just a base. There we go. Much better. So I had this double area, basically, the last attempt to push lower, and then also this base area where price tends to come into, acts as an order block, and then reacts off of it. So because we were struggling so much down here to try and push lower, I just thought, and this was also the most recent base. You're going to struggle to see it here, but if I zoom in, you'll see that it was almost like a doji-esque, very, very small opening candle and a very large wick above and below. And then I just take the wick below and then the body open of that candle, and I just want to see how it reacts to it. Then we had this volumetric reaction off of it, which you didn't really get in this area over here. And this was the last movement that caused price to make a new high. And I just decided this is good enough for me. This is good enough for an entry point. Wanted to take the top here. It didn't take my full one. I did end up taking 1.18 R on this one where I closed it. I closed it on 25,317.29, so not bad. But in general, it's supposed to be like at the top end of it, but it just missed it. So yeah, I'm happy with where I closed it.
Yeah, I think that makes sense because we're basically in the decision point that you need the next drive to go up. So I think that's completely fair.
I mean, this was the most logical area for me where we've already had one price reaction.
Yeah.
So if it was going to come back to it, it was going to come and test this whole area. It's done so already, and then now I want to see if it's going to react off of it. Is it going to start pushing higher, or is it going to do what it did previously over here, and that is to start pushing lower? If it starts pushing lower during New York, then I know that this area, this base area of mine, is valid, and it's still, it's still being upheld. But if it's being broken through and then retested and then pushed up during New York, then I know that this low down here is a much stronger, more established area. So if price were to react and come back down to this point, then I can at least consider it as a reactionary point. So in future, it comes back down, maybe it's going to consolidate a little bit and then break up to the higher.
Yeah, and that was very much a bit of an over-pocketed drive, right? That was off the news on Friday of Oracle, doing the data centers for OpenAI in 2028 instead of 27. So, yeah, it was a bit of a one of those kind of pushes. I just wanted to answer this because I will have to dip out in a sec. So, Yassir was asking, this was a while ago. Sorry, bro. I was meant to answer it before, but yeah, so generally I'll look for at least 1.5. Sometimes I'll take negative risk reward on a certain trade, depending. That's normally due to volatility expectations, or if there's some kind of trade that I do expect to play through, but you might have some upcoming news. So I would just want to extend the expansion of the drawdown for it. Now, typically, obviously, I'll size the trade appropriately to allow that, right? But yeah, typically minimum 1.5. Ideally, depending on the setup, I'll go for much more, like 3 to 6 typically as well. But it depends on the entry, the time I expect for the trade to play through, and the forward conditions of, say, you have like a central bank meeting or something else coming forward of how long, if I needed to, could I hold this trade? Is it going to be the next half an hour, or even 10 minutes, half an hour, 1 hour, 4 hours, day, 3 days, right? So it sort of varies around that, but minimum 1.5, yeah. So that said, I will have to say goodbye for now, guys, and I will see you guys tomorrow for now. So
Shot, LJ. You have a good one, mate.
I'll leave it to you guys.
Nice one, bro.
Ciao for now.
Ciao for
Peace
now.
out.
See you later, man.
See you guys.
Hello there.
Hello there, General
Dude, I'm-
Kenobi.
I'm just looking at this. What do you call it? This risk management indicator algo thing. Dude, it's super
You
cool.
mean
but
the position sizer.
yeah, but I don't know how to execute on it. Doesn't say execute.
I can teach you very quickly if you want, mate.
So I'll bring up my chart real quick. Let's say, for example, I wanted to buy. I don't know. Now, let's go.
Okay,
How
so
do I-
first
how do I
thing
ex-
that I would suggest is change the colors of the lines. First and foremost.
How do I do that?
Okay, so
Bro,
in
I'm
the
a
top,
dinosaur. Like I know I'm younger than you, but I'm a fossil.
top right, there should be a little hat on the top right of
Oh,
the
right, yeah,
window.
fair. Okay, yeah.
Double
go
click on
into then in inputs, yeah. Is it
Okay,
inputs or common?
then if you scroll down, you should see purple, goldenrod, blue colors, just like
Yeah.
a few colors there at the bottom. All right, so
Yeah,
change those colors so that they reflect what is your ideal stop loss, take profit, and entry point lines. That's the first and foremost thing that I would say. So like for argument's sake, red is stop loss, so mine is red, my entry point is a black line, and then my take profit is a green line. So I would have those ones as is. And then you have to do both the top one and the bottom one where it shows that information. So you should do the fonts and the lines.
Oh, okay, yeah, I got you. Yeah, fair.
And then when you're done with that, then we'll do the
Then
next
we'll
thing. When you're done with the inputs, you go over to common and you make sure that they allow algo trading is active.
Yeah. So those stop loss. We don't need that. Who trades with one of them?
Yeah, the only ones that I have is the stop loss label and line color, the TP font and line color, and then the entry line color and entry label. Just those three.
Yeah, fair.
Okay, so you're happy with that, yeah?
Oh,
Okay, so which one is that? Is that your entry point or?
so this
Does
is
it see
this is my entry. This is my stop
the
loss,
purple
and then
line?
this is my TP.
All right, so what is that other?
I have no idea what this is.
Okay, so that's maybe something that you need to go and see that you didn't accidentally change something. Maybe that is your stop price label and stop price line.
Yeah, I believe. What the hell's the difference?
Yeah, you can remove that one. You don't need to see that one, mate, because you've entered a stop price on your screen as well, which you don't need.
Yeah, stop price label. How do I get rid of that then?
You can literally just go and change it to any other color. Make it blue, as an example.
Oh, okay, fair. I got you.
Yeah, once you've made it blue, we'll get to the where you can change the setting in the EA to actually remove the line.
I feel like I'm learning trading again.
Dude, believe me, once you get the hang of this, it's amazing. All right, so
Awesome.
Now, on your position sizer on the left-hand side of the screen, you will see there's five little segments: main, risk, margin, swaps, and trading.
Yeah.
You see those ones. Okay. On the main one is where you're going to select your entry point, your risk parameters, and stuff like that. So you'll see the entry point obviously is your purple line. You'll have a stop loss, which you can drag on the screen as you want, and it will adjust it there. You'll have a TP box, which you can have a multiplier, so you can do 1 to 2s, 1 to 0.5s, all of that stuff. If you click the TPX button, it will move your take profit to one to the distance between your entry point and your stop loss. Okay, so
fair.
as an example, you can put it to 0 if you don't want your TP like that, or what you can also do is you can
if I wanted like a 2 to 1, I'll just put 2.
You can put 2, and then you click the
2x
TPX, and
my
then
stop
go
loss.
2x. Yeah, the distance. Okay, if you don't want to trade with the take profit, right next to that TPX box on the right-hand side, that's left. Not the lock, the numbers, the 1.34080. You click on that one and you make it 0, and then it will remove your take profit. All right. Now, if you want to do 1% at the bottom, you've already got your 1%. It gives you your parameter. If you move your stop loss up and down, it's going to adjust the position size in relation to the amount of risk that you're doing dollar-wise and the risk percentage. So as you see, it's now 0.6. If you drag it 1.1, and so on and so forth. So you don't even have to calculate how you want to, or what size you want to go for.
What
it
a
does it for you.
What an absolute
It's really good, mate. And you can also, you don't have to do percentage. You can also do dollar risk. So if you wanted to risk $50, you click on the risk, comma USD, which is under the risk percentage. And if you click that one and make it $50, then the one just above it.
Yeah, fair. Yeah.
If you make that one $50 as an example, then you're going to do $50 of risk. But in general, click on the risk 1% and you change that one to what you want.
Yeah.
You move your stop loss up and down where you want it, and then you're happy. If you are happy with this, you go to the trading tab.
Yeah.
So at the top left, there's a trade button, literally just underneath the main. If you click that one, it's going to enter your trade.
Oh, okay, fair.
So at the bottom, you have
with all the inputs that you've just put in as well.
With all the inputs that you have, and it's going to update itself as you're going over from the main tab to the trading tab. It'll update the information. At the bottom left, it says ask for confirmation. So the moment you click trade, if your ask for confirmation is selected, it's going to give you a pop-up that's going to say, are you happy with this? Enter. That's it.
Wow.
Now, the nice thing is, go to the margin and the swaps tab. Well, let's start with the swaps tab. Go to the swaps tab. It gives you your long and swap information, as well as the triple swap on Wednesdays. It shows you how much you're going to be paying in swaps if you hold this overnight.
Let me go over to the NAS, because this is my swing trade that I'm currently just entered in on.
Okay, so you click on that to enlarge it. There we go.
Okay, yeah, fair. So yeah, I'm paying. Okay, interesting.
Now remember, this is now assuming because you've entered a NAS on a 0.1 as well as a 1. If you go to your main tab now, you'll see that where your risk to reward is, it's not going to be the same. You were supposed to enter a 4.5 position size for your risk to reward here, but obviously you didn't. You entered no. So that information on the swaps is based on this information on the main tab. Yes,
fair,
not according to what is currently already entered in the market.
Yeah, okay,
and then once you've entered, you can click the hide lines button, and then it will hide the lines according to, or that was on your screen for the entry point and then the stop loss point. So if you need to make sure that your entry point and whatnot is where you want it. So drag your stop loss to where you want it to be, because I think your stop loss right now is Is that your stop loss or take profit?
Yeah. That's my. Oh no, that's my take profit. My bad.
So where's your stop loss line?
I don't know.
No, that is your stop loss line, mate.
No, it's green. Oh, hang on a minute. I haven't changed it on.
I haven't changed this one yet.
Right, yeah. Okay. Right. Bear with 2 seconds.
Yeah.
That makes more sense.
So what you can do is you can save a template, and then you can load the template. So go to the one that you already changed, save it as your, I don't know, like your normal settings, and then you load it on this one because it should go to this. It should take its information from the same area.
Well, I'll save it.
Yeah, save it as Will Davis 1.0
I will
whatever.
save it as Will's risk. Bosh.
And then on this one, on this screen, the GU one, you, or whichever one you, on NAS, I think NAS was the one that you were busy with. You go to NAS, you open up that same information, you just click load, and then you load it from the same saved file, basically.
Try again. Will's risk. It didn't want to save to that file I initially saved it to. There we go. Cool. Excuse me. Right, so now just go up and load it up.
Yeah, and then whenever you want to enter a trade, just remember, set the risk, execute on the trading tab. Done. As simple as that.
Would you look at that? Ain't that something?
And like I'm saying, the advantages of using this is, first and foremost, you don't need to go and calculate your position size based on the information that you have at hand. You literally just draw your stop loss to where you want your stop loss to be. Make sure that your risk percentage is input, or if you wanted to do a dollar risk, then you make sure that that one is the one that's selected. Confirm your entry, go to your trade, press trade. You can't accidentally enter a trade if you've got asked for confirmation.
I was going to say, especially if you got asked for permission. Dude, that's
wait
awesome.
for permission. You can't accidentally enter it. When it comes to accidentally entering a trade by clicking the quick trade buttons, it eliminates that completely. So if you're going to enter a trade now, it's with purpose. So you're purposefully entering your trade.
There's no excuse like that. You have entered this trade because you want to. You can't give the rubbish of, oh, I've just accidentally entered it. Ha, 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 ha. It's, dude, you just click.
But like I said, all you need to do is just make sure that your lines, your stop loss, your take profit, and that stuff is where you want it, and that your percentage is as you want it. Confirm that. Go before you go off of the main tab. Go to the trading tab. Okay, I'm ready. It's breaking. Enter. Done.
Yeah, nice. See, every day's a learning day, guys. I've been in the market 7 years and I didn't know any of this.
Yeah, you should go back and thank Victor when you see him this afternoon. Just be like, Victor, via Richard, thank you very much for introducing us to the position sizer from earnforex.com. And it's free to use, by the way.
Yeah, that's mega, man. That's
it's free to use,
cool.
and it was recently updated as well. And
That's
here's another cool thing as well. Go back to the position sizer. Yeah, on the main tab. There where it says just underneath the stop loss, the TPX0, just to the left of that, there's a plus, a little plus sign. You can have multiple take profits.
Oh, no way. You can have like TP1, TP2.
Exactly.
Bro, what? No. Where was this years ago when I had like 3 TPs?
And then here's another thing. There where it says instant, right in the middle, basically, just next to the hide lines.
Oh, yeah.
There. If you click on that one, you can make a pending order, or you can make a stop limit. So you choose what entry type you want and how you want it to enter. And then on top of that, when you have go to the pending one as an example. So just click again on instant to make it pending. If you now go to the trading tab, you can have your minimum entry distance, maximum entry distance. do not apply take profit as an example. You can add those information however you want. And then you can add an expiry date as well right next to the magic number. So there's a magic number, just to the right of it there's an expiry. You can make this one expire in an hour or 2 hours, but obviously you have to do it in minutes.
Dude, that is nuts.
It's
That
pretty
is
cool.
so cool.
Like, it is pretty cool. And the thing is,
I'm never trading normally again. I'm forever going to use this.
I posted the link for this last week, Wednesday, in the chat. But I will ask Renee if he would, or not Renee, Remy, if he would be willing to just post it in. For those who want to use it, it is pretty good. It is a free to use. Obviously, it's not an affiliate of the Fivers or anything like that. But I think it's, when it comes to as a tool for people to use to help elevate their trading, I think that earnforex.com's position sizer is great. It's really good.
Pretty good. This is revolutionary.
That's pretty good.
Right, we've got 4 minutes. If this closes nice and bullish, where it is now, I'll be buying GU. In
Are you going to leave your stop loss there where it is? Are you going to?
Yeah, I think so.
Okay, so
yeah, I think so.
So just remember, if it closes now and you want to enter, just make sure that on the position sizer, all the information is as it should be. Go to the trading tab, trade, done.
Right. Sorted. What an absolute legend. Rich, thank you very much. Victor, if you're watching, you're a legend for showing Rich how to do it.
Yeah, no, it's. I'm not going to say that I did not. Wait, how can I phrase this? My trading was good before. I'm not going to say this revolutionized anything for me. What I am going to say is that it's revolutionized trading for me.
Yeah, I was going to say again, same as that. Like, dude, I've been in the market 7 years. I'm profitable. I'm a full-time trader. This isn't making me a profitable trader. However, this has made trading so much easier. Like, I know just looking at this, it's made trading easier. It saved the hassle of trying to work out how much risk I'm going to put on. It saved the hassle of trying to work out what lot sizes I need. It saved the risk of having to enter a trade before dragging and dropping TP and stop loss. Bro, that's insane.
You cannot enter a trade without a stop loss. If you can do that with just regular clicking the button, and if you don't have a stop loss, it's going to enter and then you have to drag it. Now imagine the moment you do that and you lose power or you lose connectivity or something like that. It completely removes that, even accidentally. If I accidentally press it, I was like, oh,
and it allowed
crap.
you to really think about the trade first. Because if you think about it, I'm going to enter now. Boom, market execution. Okay, now I'm going to drag my stop down. Where do I want it? No. It's like, you must think exactly where you want it before you enter the trade. It allows you to be a little bit more certain with your trades, should we call it. It allows you to be a little bit more like, no, I'm putting it here because I want it here before I even enter the trade.
Okay, but before you carry on, I'm noticing something on your screen that's going to prevent you from entering. Make sure that the algo trading tab is clicked at the top next to new order on your... Yeah. Make sure that is on, otherwise it's not going to trade.
Yeah, that makes sense.
And then on the common tab, when you've opened up the position sizer on the right-hand side, you just make sure at the bottom it says allow algo trading is also selected on. Otherwise it will not.
I thought I was going to say, I'm pretty sure I did that when I loaded it. Well then, isn't that cool?
All right. I think we should have a little quick look at chat because we
haven't... 100%. Let's have a quick catch up with chat.
We were going on a bit of a tangent of me teaching
Will went through a mentorship lesson with how to use a risk management algorithm.
Yeah.
I mean, to be fair, like chat, if you're wanting to use something like that, at least you no longer have to question on how to use it. Just refer back to 11:30 UK time on the Fiverr stream. You'll be able to watch watch live on how to use it. Here in Chicago, McDonald's is always packed. Bro, that's awesome. We got an American viewer in. We've had a few American viewers in, which is super cool. Welcome from Chicago. Or welcome from the UK. But welcome Chicago from the UK. There we go. That's better.
You got there in the end, mate.
We took the scenic route, but I got there. We took the long way round. Welcome, Ty. How you doing, man? All right. Yeah, let's have a quick chat with chat. Where were we with chat, by the way?
I saw one or two Boost Mindset asking, what do you think about gold?
Louis, hello, Richard and William. Yo, what's good, Louis? How you doing, bro? Maya, William, so you were saying that everything was perfect except that you were not in the trade.
The trade. Everything about your analysis was perfect except the trade did not enter. I think it was on your GU trade.
Oh, yes. Oh, okay, yeah. Let me break that down a little bit better for you guys. Yes, so this was my GU trade, or this was GU this morning, and I was actually away from the screen during all this here. However, I was at the screens during all this here. So I thought, okay, I want to see a break and close above. This is actually what I wanted to see. So I think maybe we were here somewhere. I wanted to see a pullback down for a continuation on up. We got that continuation up. We pulled back into a fair value gap or into a imbalance, whatever you want to call it, or I don't know what else you can call it, fair value gap. So we got that area there, really, really nice. We've also had the fib. So if I get my fib out, there we go. The fib, there we go, just like that, perfectly double wicked into my golden zone, as well as we've had this high break and retest. So we've had a break and retest. We've had a fair value gap or a imbalance, and we've had a Fibonacci retracement zone. We've had 3-4 confluence stacking in the position and creating order flow with higher highs and higher lows. This would have been an A+ setup. So in theory, I should have entered in around about here.
But so you missed your entry by what, like just a few pipettes?
No, I wasn't in. I got to the markets. We were up here. No, I wasn't at the markets to watch it, unfortunately. So it was just. It was an amazing trade that I just didn't see until I got to the markets, and I was like, "Oh, this is a shame, I've missed it." But oh well.
Yeah, that's unfortunate, mate.
Yeah, but I'm in a $100 account. I split 500 already, dude. That's awesome, man. Big congratulations to you. 500. That's nuts. It didn't matter $10 or 100K account. The matter withdrawals as much you. It doesn't matter $10 or 100K account. What matters is withdrawals. Yeah, no, 100%. Yeah, I just wanted a bit of fun. So a bit of Christmas fun. But thing is, like, bit of Christmas fun would have been fun with a $100 account, whereas this 10K account, I know that it could actually pay me some good income if I looked after it a bit more. Whereas a $100 account, if I get 1-2%, it's like a couple of quid. It's not really going to do much for me. So it's like if I flip it or not, it doesn't really matter. Whereas a 10K account, if I actually look after it and I make some good gains, then 1% is $100. 2%, that's $200 a month. $200 a month extra just for chucking this onto the back of my trade copier. That's not too bad. That's not too bad at all.
Dude, even if you just use this account to buy more accounts, as an example.
Yeah, well, yeah, literally that. You imagine 2% over. You imagine I get this live funded 2% over 2 months. It's a $100K account right there, nearly. It's $400.
Yeah, just like that.
Yeah, so now that I've got this account, it is my Christmas account. If it blows, it blows. I'm not going to cry about it. If it passes, it passes. Happy days. I will concentrate and take this seriously, but this is going to be my Christmas account. You know, it's going to be a little bit of fun. You know, I'm not taking it overly seriously. I'm just going to see what happens. However, I kind of want to see how far I can push this. You know, I kind of want to see if I can pass this now by January. It's a little bit of a challenge to myself. And if I can, then happy days. If I do pass it, then you guys will watch me pass another account live on stream. And if that is the case, I'll chuck it on the trade copier, and I'll keep you updated with how it's going if you want me to. But it'll just go into the back. It'll go into the filing cabinet, should we call it?
Yeah, put it in your that file that says done, dusted, got another one. I'm the best.
Yeah, exactly. Yeah, another one added.
There was a comment here that I wanted to bring up. Obviously, I can't bring the comments up, so I just wanted to. It's from David Wizzy. I can help anyone flip or manage accounts. Message me if needed. To anybody in chat, I would not.
What? Message me. I'll put you to the test.
No, okay, hold on. Hold on, mate. On a serious note, I would advise against this, first and foremost, because you as a trader should learn how to trade yourself, meaning you should be the one taking the trades, doing the analysis. Don't rely on someone else, because more often than not, it will it will end in you either losing your capital, or you getting scammed, or you learning how someone else is trading, and at the end of the day, if things go wrong, you don't know how to change your strategy. So it's always better to teach a man how to fish than to give a man a fish. That's what I would say. And Louis has said it nicely. New traders should never let anyone manage their accounts, as 99% are scams, as well as be careful, friend, just learn to trade yourself. I love this. So Louis, thank you very much for saying what I was thinking. I really appreciate that.
What time was that comment?
The initial one from David was 11 minutes ago, and then there was a few ones after that.
Oh, yeah. I got you.
And then Louis' most recent one. I would not advise this to anybody.
No,
don't
David
let someone else manage your accounts for you.
I will say, mate, big congratulations to you if you've got the capabilities of doing that. However, I'm sorry, but I'm going to crap on your business a little bit here. Guys, don't go to David. David, I'm sure you're a fantastic trader, and I'm sure you're more than capable. But I'm not going to recommend anyone goes to you. So sorry, mate, but exactly what the guys are saying. You got to learn how to trade yourself. David, if you're a fantastic trader, then big congratulations to you. Everyone else who maybe not quite where they want to be in their trading, instead of taking a hard lesson and potentially going to David and either learning how he trades and being like, wow, he's a fantastic trader, I now know how he trades, but I still don't know how to trade. Or you're going to lose all your capital. So I've given people chances, and I've done like sort of series where a friend of mine has put money into an account with a guy, and I said, sweet, all right, let's do it. So and I exposed them on my Instagram. I'll happily do it. So like David, give me a message, man, because I will expose everything and everyone on my Instagram when it comes to that sort of thing. I don't like people being scammed. I don't like people being taken for their money. So I will, and I did it. I went on to someone's account and I said, "Bro, I got 100. I got 100 quid here." Oh no, I think I got 300 quid. I said, "I got 300 quid here. What do you want me to do with it?" He said, "Oh, put it into an account. We'll do this. We'll do that. We'll do this. We'll do that. Promise you, we'll do this." Straight up exposed him, and he blew the capital. And I documented it every single day, his P&Ls and what he was doing, what he was saying. I didn't screenshot the messages. But what I did do, as I said, look, guys, I'm a full-time trader of 7 years with 7 years experience. I know how to trade. If I didn't know how to trade, I would have gone with this guy, and this guy would have blown all my capital. I said, look, you've got to seriously concentrate and remember that you've got to learn how to trade. You've got to learn how to fish. You cannot eat another person's fish. Don't sit at another person's table. Learn to build your own.
I love Mario's comment. But before we get to that one, Boost Mindset is asking gold, please. He's asked twice before already as well. So, Will, if you don't mind just going through gold quickly.
I can indeed, my friend. I can indeed, quite happily. Gold is crap. You're joking. Oh, I mean, it's not great, but let's have a look at gold. Gold's consolidating a little bit at the moment, guys. We had this massive. Oh, look, it even says stop loss. We had this massive drop down here, which was super cool because it came into this really nice area of confluence, or this really nice area of interest here. This big demand zone, or this big sort of. Would this be a support zone? Yeah, this big demand zone, this big sort of consolidation. We whipped into it huge, and then started moving back on that. What are you giggling at?
In the wild.
Okay, I'll have a catch up in a minute. So as we started moving back up on the 1 hourly time frame, we started really slowing with that momentum, and then we started, as we went into the different session times, we started increasing in that momentum, in that bullish momentum. And then if we drop onto the 15-minute catch up with price, then we can see that we're currently at this big drop. This big previous bearish candle that I explained a little bit earlier on. We're at that high now, and as we're at that high, we've started consolidating, pulled back a couple of times. We pulled back really nicely into this imbalance zone here, or imbalance fair value gap zone. Pulled back really nicely there, as well as into a nice fib zone. Also bullish structure, bullish order flow. Unfortunately not, though. We didn't quite break and close above. It is what it is, unfortunately. So, I wanted to see if I can get some moves on gold. I also traded gold today, but I didn't quite get what I wanted, unfortunately. As you can see, I managed to get about break even, I think, maybe just under. So, sucks, but we just didn't quite get that break and close above the highs on the 15-minute. What did we do then? We swept the highs with a nice little wick, and then we started dribbling on back down with low volatility, low momentum. You can see there's wicks all over the place, highs and lows, not so big candle body sizes, other than we've got this one here, followed by, again, an absolute drop in volume. So now that we're starting to move back up, let's zoom in just ever so slightly. There we go. All right, now to zoom out. Cool. So really nice that we double wicked into this area and moved off in a bullish momentum. That was quite cool to see, but I don't want to be trading this now until I get a break and close above this previous high, this previous swing high, let's call it. So this high here, it seems to be a massive resistance zone. Seems to be a really big supply zone. That price seems to be failing to break above. So what I want to see is a break and close above that, maybe a pullback or a continuation. So I do want to see buys, but first I want to see a break and close above. What level is that? 435,420. But yeah, that's what I want to see. If not, then I want to see a close. If we're going to sell, I want to see a close under 4318.60. I think that'd be really nice.
So you want last week Friday's highs to be broken, and then
a nice break and close above it, and then a continuation on it.
All right, fair.
Anyway, guys, unfortunately, Rich, I've got to shoot because I got a meeting in 2 minutes regarding next week. So this is going to be super exciting, guys. Make sure that you do get in it. But unfortunately, I'm going to have to love you all and leave you. I shall leave you in the very capable hands of Richard Butler. So, guys, thank you very much. Make sure that you smash the like button. Make sure you subscribe if you are new here. And we shall see you all el mañana. So, thank you very much, guys. And again, sorry I'm popping out early, but I shall see you first thing tomorrow. Take care, guys. See y'all later.
Awesome, Will. I'll see you tomorrow, mate. Have a good one. All right, guys. And then it was just us. Now, unfortunately, I cannot bring any of the comments up. However, I will read them as I go, and then I'll try and address them one by one. Okay, so we've already gone through that one. To everybody that was saying thank you for the position sizer, you guys are more than welcome. I see that Remy has already posted it, a link for it. If you just scroll down a little bit on the chat, you will see that the link is there. It's the www.earnforex.com MetaTrader Expert Advisors. You can do it for MetaTrader 4 as well as MetaTrader 5. I don't think that they use this one yet on CTrader, so it's kind of like a MetaTrader exclusive. But I do like it. It really works. So I would suggest anybody just play around with it and use it. Use it any day. Ooh, do, 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 do. Mud is asking, hi Rich, when you backtest your strategy, do you take your time in applying discretion or just apply the rules-based system to collect data? Thanks. So, I'm not really a discretionary trader. I'm a rule-based person. So I love rules. The thing about a rule-based system is that you can see the exact point in which your strategy is either working or it's not. So to give you an example, if I decided to test a breakout strategy as an example, and I look for an area such as this one where we have some consolidation or, just a little bit of sideways action. Now, if I'm going to test this, whether or not it's something that I can use in future, I come up with an idea. And the idea is, okay, I will take on the 1 minute a breakout, the first candle that closes above this consolidation area. The very first candle that goes above that one is this candle over here. This is on gold. So this was during the Tokyo session. Now, my rules-based idea would then be built on the suggestion that, okay, I'm going to take my stop loss and put it on the opposite side of this consolidation. And then I see, okay, it's roughly $10 per fine ounce as an example. And then I'll say, okay, my rule is then going to be, if I am going to enter a trade such as this one and my stop loss is going to be on the other side of the area of consolidation, I will go for a 1-to-1. And then I look for the area where a 1-to-1 played out. So in this case, it's that. Now, for me to backtest this exact thing, I need to make sure that I find areas of consolidation that are of similar size or are of similar longevity, like how long it's been in consolidation. So the rules-based side would say, okay, I see that this was $10 per fine ounce, so 100 points. Why don't I just, whenever there is a breakout from consolidation, I just make my stop loss 100 points, or in this case, $10 per fine ounce, and then I go for a 1-to-1. And then I test that. I go back and I look for areas where consolidation happened. I use the replay function. So I will see, okay, there was a breakout. There's the movement. Okay, but can I see it in real time? So I will place my backtesting, the replay, and then I will just try and go one forward per minute. Okay, not yet there. Okay, so this was the candle that broke it. Okay, so that's the one that I'm going to... And then I will take each and every one of those entry points and kind of jot them down over, let's say, 1 month as an example. And then I see how that works. And then if in that 1 month, it doesn't really look like it's got like any efficacy to it, it doesn't really look like it's going to end up being a strategy that I can invest my time into, I will go into a second month to see maybe it was just that 1 month. Let's say it is December that I decide to do that, like now. And the market is slowing down, so obviously there might be a little bit more consolidation, but the breakouts itself is not as strong, and so on and so forth. So I would build my idea around a rule. And then I can see exactly when that rule is no longer the rule, when it's no longer the norm. So if, for argument's sake, the consolidation changes completely, or the how long that consolidation was, or how broad, because the price consolidation here and there, this range that you have here is not the same always. I can go to a different area and see, oh, okay, we have consolidation here as an example. There's the breakout as an example. On the breakout, I enter there, have the same thing. It might look in essence as if this is going to be a profitable trade, but sometimes it's just not gonna. Sometimes the same idea of consolidation, breakout, retest, that kind of like thing. Sometimes you fail to retest. It's really just going to depend on how that rule set is being followed. The thing about discretion is that I can trade in hindsight. And that's the thing about discretion. I can convince myself that I'm a discretionary trader because I traded in hindsight. Oh, look, here there was an entry point right there, and I would have entered right there, and I would have put it right there, that kind of like thing. That's discretion. But when you go and forward test it, you just realize that it doesn't always work, because in the moment you can't see it because you're looking at it in hindsight. That's where the discretion is. Like, I'm a discretionary trader. Discretion just means I'm experienced. I'm just an experienced trader, and I'm feeling the market. I'm trading according to what I'm seeing instead of set rules. And the thing is it discretion? Is it experience? Or is it greed? Or is it want? I want the market to do this thing, so I'm going to enter a trade, and then if it goes in my way, see, discretionary trader. Not that I'm trying to bash discretionary trading. I just mean for myself. When it comes to my back testing, I start with rules-based, and so that I can see what portion of the rules works and what doesn't. And then based on that, I will move forward and try and take trades that's either in line with that rule set, or I will trade until the rule set needs to be adjusted. And then I would make small adjustments and play around with the rules a little bit. I like the ideas of rules. It's a mechanical system. It's easy to follow. No hindsight trading. All it is I see setup A happen, and I'm taking setup A's entry point based on back-tested data.
Hey.
What's up, Jonatan? How was the chicken?
Good, but I forgot it in the oven, so, I jumped off the live stream, put the chicken in the oven, and then I remember, all right, I got to record a video. So I go down to the office, I start recording the video, and then I get a message, and I read the message, and then I see something else, and I look at that, and then I go on the web, like, all of a sudden I'm on the charts. and I forget everything about the chicken. It's like, I got to be live in 15 minutes again. I got to go get the chicken. It's like, it's supposed to be in for 20 minutes. It's been in for 45 minutes.
Oops. Is it a bit dry?
Yeah.
Or is it salvageable?
It's a bit dry. It's a bit black.
It's like, it's stuck here. Oh, you burnt it. Oh, no, mate.
Yeah, I did burn it. So I like scrape off the burnt chicken. You know what I mean? But, it's about survival.
Yeah, I mean, like, you're so far north that sometimes you have to make sacrifices, and unfortunately your chicken sacrificed its most delicate soft skin for, I don't know, for you being ADHD'd for a second.
Yeah, exactly. All right. So you're going to be back later, right? Because you're going to be covering the last hour of the live show, so people are going to be having to deal with me here for an hour, and then maybe LJ is going to come on later, but we never know. We never know about LJ. We'll see.
Yeah, I mean, I'll jump back in the moment, like in 30 minutes, 45 minutes or so. I'll be back in again.
Whenever you're ready.
Yeah, I mean, if I've had my coffee and I'm ready, I might just come and join you again, so you're not completely alone for the next 40 minutes or whatever.
Nice. I like that.
Okay, so we can just hop over to your screen if your screen is up, and then I can quickly just jump out.
I'll do that. Perfect. All right, see you soon.
All right, I'll be back in 30 minutes or so. Cool. See you guys just now.
So I'm currently looking at CAD CHF. We talked about this. So, I trade from my personal account, and then I have that connected to a trade copier to the Fiverr account. And the reason why I'm doing that is because, lately I've been talking a lot about something that I think is very important. But by the way, how's the sound? Let me know if the sound is good, or if because I'm on the laptop right now and I forgot to plug in my external microphone. So let me know if the microphone and the sound is all right. I'm having some technical difficulties with the setup in the office. I'm using but you got the nice background. You got the Christmas tree in the background. It's not every day you get that. It's actually not every day at all. It's only anyway. So I set up a personal broker because I've started taking on. I'm not gonna say role, but I started talking a lot about how I feel like we need more honesty and we need more transparency in the trading industry, right? So, for example, if a trader is selling you a service, then we assume that that trader is profitable, or at least have been profitable over a meaningful time horizon, right? Because I can buy a trading course from a trader if that trader tells me, "Hey, I'm not profitable anymore, but I was profitable consistently for 2 years, and I had a pretty good win rate with the risk to reward. My profit factor was good. They could basically show that they have a good Sharpe ratio, or preferably a good Sortino ratio, which basically means that looking at how much they're risking and how much drawdown they have in a system, they're making a good amount of money. And if you're able to be consistently profitable with a certain number of trades over 2 years, you could definitely say that you know how to trade. And but then something might happen. Something might happen in your personal life, or the system that you're trading might just lose its edge, right? But you develop that system yourself, which means you know how to develop a system, you know how to trade, you know all of that. So if you say that I'm not profitable today, but I was very profitable over this time horizon here, and I can teach you the same method I used to develop that system, then that's worth money, right? That's worth money, because the time and effort that that person put into developing that system is worth money, even if it's not profitable today. But I know that there's a lot of trading influencers and a lot of trading educators out there that do not have that track record, and I don't have the track record. Okay, and I'm 100% honest. I'm transparent with you guys. I don't have that track record. I don't really have much to show, because my personal trading has been so sporadic, and it's been, a couple of months in crypto, a couple of months of this broker, and then a change broker, and I had a prop firms and all of that. But now for 2026, I'm just gonna have the same broker, the same account, and I'm gonna, just show my track record. Because if I'm gonna be the one telling others that they better have a track record to show, then shouldn't it make sense that I do the same? Walk the talk, right? Or walk the walk. Is that what you say? Walk the walk, whatever. So I've set up an account with IC Markets, and but I got too little money on there, so I need to deposit more money, because I want to be risking 1% per trade, and I need more money. So I think I need at least two grand in there to take the lot sizes I want and risk the amount. So I can't walk the walk, talk the walk, walk the talk the walk the walk. Okay, thank you. So I can't enter this trade right here on my personal broker, but the personal broker is connected to the Fiverr's account. So what I can do is I can just pop in, and I have a chain of a copy trading chain, if you will. Everything goes from first my personal account, and then to a Fiverr's account, and from that Fiverr's account, others' account. So whatever trade I open on the Fiverr's account will also get triggered on the other accounts, but not on my personal broker. That's what I do for gold, for example, because gold has lower leverage and more margin required to open a position, which I'm looking to increase the account size of my personal broker going into next year, so I can actually properly start that journey to build the personal track record. Try to set a standard in the industry. But I can't do that right now because I need to deposit more money, and also need to buy all the gifts, right? For the Christmas gifts, and it's a lot of money. It's a lot of money. So this is the account. And I now want to open the position that I showed you guys on CAD CHF. So I'm just going to go in here and do CAD CHF. And for a swing trader like myself, or at least for me, having 3 positions open at the same time is not normal. And opening a 4th position is definitely sorry, I got a message and now I completely forgot what I was saying. But I'm gonna go into CAD CHF here. We're gonna go to the daily time frame. Yeah, what I was saying was the amount of trades that I've opened now is not normal, but sometimes you get these bursts of trade ideas is popping up. So in November, I think in November I took 2 trades. I don't get it. Maybe that's supposed to be funny. I don't know. I'm sorry, I completely missed the joke there. I feel like maybe I shouldn't know. I don't know. Okay, so entry is going to be market, and then okay, it says there's a new version of the position sizer available for download. Nah, I want to use this one. I don't have time to do all of that. Okay, profit level. What I'm doing now, you can't see it, but I'm going in and I'm copy pasting the take profit and the stop loss from TradingView into MetaTrader. How much am I going to risk on this account? I think it's 0.25. Yeah, that's right. I'm risking 0.25% on this is a 2.5 R trade. Yeah, okay. I'm going in here on this one. I'm going to go long here. Long entry, instant, stop loss, TP, 0.25% risk, which is $200. Clicking trade. And there we go. I'm now long on that one, which means should also be executing the trade on the other connected accounts as well. Right, let's go back to TradingView so I can share with you the idea of this trade. Just give me a second here. Right, there we go. Nice. Okay, so very simple trade. Basically, what I'm seeing here is a potential reversal. Now, what this reversal is based on is the double bottom here. You can add a clear horizontal level right here. And that is the break and retest of the double bottom neckline. Now, this is a picture perfect price action structure. And the way we trade this is we look for a breakout above the neckline and then we wait for retest of the breakout area, which is the neckline. And then what you want to do is you want to take your fib tool and you want to select the low of the breakout move to the high of the breakout move. And you want to be looking at the area between the 0.618 and the 0.786. And you see here the price comes down and perfectly hits that fib level right here. Now, if I wouldn't be so impulsive, I would probably wait for the close of this daily candle. but I actually like the close of Friday's candle, closing as sort of an indecision candle with big wicks to the upside, big wicks to the downside, a small body, but the wicks to the downside are slightly longer, telling us that throughout the session, bulls took control. Excuse me. Yeah, we're going to take a look at gold as well. First, just going to cover this idea. And if we add the moving averages, this is where it like the beauty of it all comes together. We add a few moving averages, and what we see right here is that the 20 EMA has recently crossed about the 50 EMA right at the confluence area right there. Now, there is this thing in technical analysis called the measured move. And the way the measured move works is price action patterns have certain rules for measuring the breakout move of when the pattern breaks out. So basically, the take profit target of a pattern setup. And the measured move on the yes, I will look at the USD JPY as well after this one. So we got gold and then we got USD JPY. So just so you know, I'm reading all the comments. The measured move is taken from the low of the double bottom to the neckline, and then you extend that to the upside. Now, given the fact that we have the wicks here, but I'm gonna be a little bit conservative here. I'm gonna use the candle close here to this area, and then I'm just gonna extend this to the upside, which is gonna be here, which is actually lining up perfectly with that high. Does it make more sense to TP here? It might actually make more sense to TP here. So what I'm gonna do is I'm gonna pay extra attention to when price hits that one. That is right. We do have CAD news. We get CAD CPI, right? Isn't it CPI? Let me go in and check. Can't believe I missed that. I mean, I was thinking about it. I was like, I'm sure there's some type of news coming out for the Canadian dollar soon. And then I'm like, you know what? Let's enter the trade anyway. So yeah, we got Canadian CPI in about 8 minutes. Nice. Wow. That's beautiful. What a timing. What a timed move. This is a great question, and I will cover that soon as well. Let's go to gold. Let's take a look at gold. So this is the current trade that I have on gold right now. I got the stop loss right here. My expectations for gold is that we are most likely going to see a local rejection soon. I'm going to be adding the linear. Is it linear regression? I don't know. Let's see. Let's put it at 100. I want to kind of encapsulate this current. What's up, Richard?
Hello.
Hey. How's it going?
Got a nice coffee, so I'm all
Nice.
okay.
What coffee are you drinking?
It is an importer's vanilla infused coffee that I made with a mocha pot.
Nice.
Yeah. I think it is Ethiopian, if I'm not mistaken.
That's the best kind.
I do like single origin coffees, so
yeah.
All right.
So I'm looking at gold here, and I just added a linear, like a best fit line channel here, what do you want to call it? And it seems like we're reaching the upper upper boundaries of this channel. So I do expect gold to start pulling back. We're hitting the all-time highs here right now. I do think that we're going to be pulling back here and maybe come back down towards this area, and then hopefully continue higher. We'll see. Or maybe, just break into new all-time highs and then consolidate somewhere in the current region. So that's on the daily. Then of course, if we look at the lower time frames, it looks strong. I think we might get continuation here to the upside on gold. And we had another. What are you thinking?
I'm also looking at it, but I'm looking at it on the 4-hourly. Also, that upward channel that you drew as well.
Yeah.
We're at the, let's say, 75% of that channel, the upper quarter. If we are going to fill this channel completely, we will have to take all-time highs in order to fill the channel.
Yeah.
But I don't
But
think...
we don't really have to, this thing is we don't have to fill the channel. That's the thing.
No, I agree. Because we reached the 75% and we wicked it, started pushing lower back into the midpoint, and then now we're back at the 75%.
Yeah. Yeah, we'll see about that. We got another question. We got USD JPY as well. So we had someone asking about USD JPY, and I did not enter this trade, but this was a trade I was looking to take. I was looking to take this trade last week. I think the opportunity on this one, at least from a daily perspective, is gone. But I do think that from a low time frame perspective, there's a pretty interesting trade from this level down to this level. So if we break this level, we could be looking at a trade like this. Should be a good risk to reward. I'm probably not going to take that trade because on the daily time frame, this is it might wick me out on the higher time frames. It might wick me out before continuing. But if you're monitoring this on a daily basis, if you're a day trader, then I would probably look at this level as the last support before reaching the 150 area. But
so
for now, right now,
coming in.
Yeah, because if you look at the daily, and we can look at the higher time frames, then let's see. So you can go out to the weekly here. We can. What I see is this range right here, and it looks like we're testing the upper boundaries of that range. So I'm expecting USD JPY to at least start pulling back from here down to perhaps the 150, which sits very nicely with the range EQ area. And then also, when you look at the daily, you see that you have a lower high. I think we can add the moving averages here as well. Actually, the moving averages are not really showing us anything here. But lower high. I think. I think we're going to be breaking down here.
Yeah, I mean, there was an upward movement channel on the daily from the 17th of October, and then the pinnacle, or the apex of it was on the 20th of November. We broke lower than that channel on the 1st of December, retested it on the 9th, and now it's starting to push lower. So I can see it definitely pushing lower from here. I would want to break through 154.48 first, and then 154.100 before I would say definitely pushing lower. But that's because I look at I don't just look at the channel specifically. I like looking at what Victor calls order blocks and areas of consolidation or where there was a struggle. So on the hourly, this became a bit of a struggle point. over here. It struggled multiple times to break through, reacts off of it, eventually breaks through it, retests it, tries again to push through it, and then starts pushing up. Retest over here, pushed higher. This is the point where we broke that channel. Retested it, came down. Retested it almost again, and then started pushing lower. No follow through to try and push price higher at this area over here. And then this is now basically a high point where price reacted strongly off of. So on the hourly, this section over here basically became the order block to push price lower. So I want to see this area down here tested first, break through, retest, and then continue lower on the hourly. And then that would go up to the 4 hourly as well, and then start pushing through that as well.
So we just had
fill this as well.
We got the Canadian CPI is coming out. It's as expected. No changes there.
The Empire State Manufacturing Index was lower than expected.
Okay. Do we know?
Did it make any difference? No.
I don't know. So I was just going to ask, do we know what that is?
We do not care.
Yeah.
No, okay. So no, I agree with you on what we were looking at. UJ, wasn't it? No, we were looking at gold. No, it was UJ. I just
it was.
No, I agree with you on UJ. I think we can definitely push lower for a different reason on my part, but I agree with your analysis. We also do have order block over here on the 4 hourly, which got tested once, disrespected, but no follow through.
Yeah, I mean that retest is quite telling. The fact that we had no follow through to the upside on that retest, and then price just fell, and now we have a lower high and it keeps falling. So yeah, it looks weak.
Another order block for me as well. Again, tested to push lower, but that's why I think this area over here needs to be disrespected first. But then again, I'm not a swing trader, so my opinion should not mean much when it comes to swing trades.
No, I mean you're looking at the time frames that I'm not really seeing. So you're looking at the 4 hour, right? Is that the 4 hour?
This is just the 4 hour.
Yeah, so the 4 hour is
4 hour.
Yeah, but you mean 4 hour is visible on the daily, you could say, but it's like when you get lower than a 4 hour, it's not really super visible. But you can kind of see what the 4 hour looks like if you're on the daily, but then 1 hour is difficult,
I mean, we do have this whole on the daily, this whole section here where we had the struggle to push higher and push lower. This was during August and September. So this is definitely an area to be tested, and this is. I mean, okay, this is 148, 146, but I think maybe this is, 147, 149. This gap.
Wait, sorry to interrupt, but I actually said that it's unchanged. It's actually lower than expected. So CAD CPI is lower than expected. Not.
The CPI month on month was exactly the same. The trimmed and the median was slightly lower than expected.
Yes, I think this is the year to year. Yeah.
0.1 lower on the yearly trimmed, as well as but the trimmed and the median is exactly the same. I think this isn't bad. I mean, a year on year, you barely had any loss in your consumer price index. It's better than losing, wouldn't you expect, or wouldn't you think?
Yeah, sure. Yeah, of course. I guess.
I mean, like if you think of CPI, you don't if it's drastically lower year on year, it means that there was a massive change during that specific year that has made your consumer price drop significantly. So I think it being closer year on year gives you the indication that there's either stagnation or there's at least not loss in the the consumer price itself. So the price of food did not drop that drastically, but it also didn't like gain. I don't know what I'm saying, but I think what I'm trying to say is that it being close to where it was last year doesn't seem like a bad thing to me.
I think you're right. Let's leave it at that. I think you're right. Good analysis.
That sounds. I don't know how I want to take that one. That sounds.
No,
That sounds wrong.
I'm not sure I follow, and I don't know. I don't know either. So all I think is like, okay, price. What is price doing? Look at the 1 hour. It's moving down. Bad price.
I mean,
bad price.
Fair.
Yeah.
Bad. Go sit in the corner.
Yeah.
Why are you being
Right.
bad price? What did I draw here? Why is this? Oh, no, never mind. I am confusing myself. Yeah, that is what is there. When it comes to gold, I think there's an interesting point to be made with what you said earlier about the potential for it to push through all-time highs and then kind of just go into consolidation.
Yeah, because I feel like, and welcome LJ.
I was about to say, did I just hear you guys talking nonsense about macro and be like, well, this, that, and like, I don't know, and yep, cool, whatever.
Yeah, that was.
I was trying to be you, LJ, and I just failed dismally, mate.
Yeah, I wanted to say that because I have no idea myself, and then I'm listening to Richard. I'm like, I don't know what you're talking about here, and I don't want to sound too stupid. So I'm like, yeah, good analysis. Let's move on.
Let him carry on. Let Richard carry on like a fool of himself. No, what I was saying is the fact that the CPI year on year wasn't that different on CAD to me is not a net negative, because if the CPI in my mind is drastically changing, that means that something has drastically changed in that country itself, like on a very simplistic way of saying it. And a year later, your CPI is still very much the same or slightly lower, to me means that there wasn't all that much that changed from the previous year up until now. So if the currency was not all that weak, it should, in theory, continue being not that weak. I don't know. It's a very stupid and simplistic way of saying it, but it's like how I justify it in my mind. It's like, oh, it's not that different. It's not that bad.
Yeah, I mean, year on year is never going to change too much because it's an aggregate of like 12 months, right? And the main thing you want to focus on is the month on month change, right? The high fidelity change. I currently can't see what the print just came out at on my news.
Wait, I zoomed in.
Minus 0.1%, but what was the forecast price?
2.9.
No, but for the month on month, not the year on year.
The month on month was 0.1, and it was 0.1. The forecast was 0.1,
Plus
and
or minus.
That was month on month. And then the year on year medium and trimmed was 2.9 on the forecast and 2.8 on the result.
Okay. Interesting. I don't know, because I have minus 0.1, not plus 0.1.
Are you getting your information from a different data feed?
Yeah, I'm getting mine directly from my broker.
Ah, okay.
Which comes through Bloomberg and Reuters.
Okay,
so Richard,
that's the only reason I would trust it a little bit more, you know.
Okay, yeah, makes sense.
Yeah.
So
sorry,
the Forex factory.
Yeah.
And what number are we talking about? CPI?
CPI, and then the month on month change.
Yeah, it's month on month. It's this one.
You know what? Let's move on. Let's move on. Okay, we have a lot of questions I want to cover in the chat here. What questions?
I just break Jonatan's mind.
Yeah. I'm getting a headache, and there's too many numbers, and it's like, let's look at price. Okay, so what kind of name is that?
Tiny Toons.
Tiny
Only
Toons.
things.
Okay.
Yeah.
Could you show your AUD trade and what confirmation you took before hopping in the trade? I'm in the same trade, so it would kind of give me some confidence to hold it longer. Oh, you- you're asking me for confidence? Yeah. Okay. That might not be a good idea. But okay, is this nah? This is not the right chart.
I
This
have
is
full confidence in you, Jonatan. So don't
nice.
sell yourself short, mate.
Yeah, I was going to say
Okay, so
you've had some very good swings this year. So come on.
Yeah.
okay, so let me break it down. First of all, so if we make it very simple here, we have you can see the
Hang on.
white lines here, right?
Here
We
we go
should
to
first
Johnson's
put on
chart.
your
Yeah,
screen.
there we go.
Oh,
Yeah.
Sorry,
right.
I brought it.
So
I
first,
brought it up.
yeah. Okay, so
On the board.
this is AUD and CD. Now, something interesting happens when you can kind of like it's not you're not really detrending price at all, but you're removing a lot of noise by just looking at trying to. It's almost like drawing a best fit line through price, and then removing price. So you can first you can add a line chart, right, and it kind of does the same. It removes the wicks, right. But in this particular scenario, it's still too messy. So there's a couple of things you can do to visually, or at least for me to show you visually what I'm looking at in price. So one thing is going to the line chart, but if it's messy, then you can go in. You can add a indicator called zigzag, and if you go into the settings of the zigzag to make it a better here. Should have lines. Let's make it I don't know, white, and then you add a zigzag, and then you right click on price, and you click hide. So it removes price, but it keeps all the swing points. And then you can go into the zigzag, and you can add a 10% threshold instead, and it's going to look like this. So this is the it's very basic. Okay, 10% for this is obviously way too much. Let's do 6. So this is kind of like the overall structure that the path that price has taken. And now to simplify this even further, I've already removed price. We can remove the zigzag as well, and then we just had a couple of lines going through price right here. And this is the whole price history going back in the beginning of 2000 for AD and CD. So we can see that it's been in this sideways trading range for many years, over 10, 15 years or something like that now. And we have not 15, 10, 12, 13, whatever. And we're now breaking above this range right here. And what I've done is I've just added a channel through this price structure, and then double that, added it to this with the same tilt and the same time horizon and everything, just to get an idea of where I think AD NCD might be trading throughout next year if it's going to follow this overall structure. So I think next year I'm looking for buy only opportunities within AD NCD. So that's the overall uh, structure that I'm trading. Like that's the framework or the macro picture that I'm trading within. And then of course we add back price. We go to the daily, and also, by the way, this channel that I showed you, this blue channel is actually the standard deviation channel with the best fit line going through this area. And then I've just put a parallel channel tool in TradingView around that, and then copy that, assuming that price action will show us similar characteristics here. And if you look at the weekly here, we see that ADNCD has broken out of the range that it's been trading in since October 2013. And this is on the weekly, right? So we have a weekly break and retest, and we have weekly structure above this range, which tells us that the market for over the course of almost 2 months have accepted ADNCD above this level for the first time in 12 years, which is significant, right? And then we have on the daily, we have a break and retest of this area, confluent with the right Fibonacci retracement levels. And then if we add the moving averages, we see that we're also bouncing between the 20 and the 50 EMA on the daily here. Now the issue with this trade is that like there's no way I'm going to be holding this throughout that whole channel, because if we add this, you'll see that, and this is the standard deviation channel based on the previous cycle, projecting forward, thinking that it's going to have similar characteristics. And we're at the highs of this channel right now. So I do expect that in the next few weeks or so, A density will retrace, and it might move something like this and then retrace all the way down here. But then it can move crazily up and down. But I just want to make sure that I'm only buying and not selling. So even though I have my take profit at around 1.19 up here, I am probably going to close this trade here, because that's at the very extreme of this move. But we know that it's a standard div channel. We had the standard deviation of 1, 2, 3 for a reason, and sometimes you get an extreme move to the upside, and you might hit that third standard deviation up here as well. So that's the overall idea for ADNCD. And so the final question, or the idea here was for me to give you confidence. I don't make decisions on this trade unless I have a swing point on the daily. My TP or stop loss is going to get hit. I'm never going to exit a trade before either TP or stop loss gets hit. So if price breaks out like this, because I view that as a higher swing low. So if price breaks out like this, then I move my stop up here. And then if it does this, I move it here. So in most cases, what's going to happen is I'm just going to get stopped out on a trading stop loss. But if I'm lucky, I'll get a spike up here. And that 5.5 R trade, if this happens, that's going to be probably 2 months worth of profits, which means I need 3 or 4 of this trade in a year to push the equity curve significantly higher. So what I'm trying to say is, don't look for confidence. Just look for your system and the statistics for it, and look at your max drawdown. Calculate that your risk per trade, so that you will never lose that many trades and go that deep in the drawdown and lose your account. And then just trade, and just keep calm.
Fair.
I'm done.
Yeah, good.
You-
I think also the macro backdrop for this trade is quite good. Australia is definitely outperforming New Zealand as a whole right now. We've had very much a back and forth between expansion, contraction, Aussie dollar getting wrapped up in the China aspect, China having their own semi GFC as far as the residential sector for the past number of years. That's now calmed down. They've had trouble getting out of that. The next biggest residential developer has also failed recently, so there's been that chop back and forth. The Aussie dollar is used as a proxy to defend or express a China view in general, because liquid, massive market has a direct window to China. And then obviously we've had the trade and tariff talks going on recently. So it's been battered probably more than is deserving per the actual current financial conditions. So now that we are coming out the other side of the tunnel, as far as that stuff, those things should start to normalize, and we're beginning to see that in Aussie, New Zealand, right there. So you got the technical and the macro fundamental backdrop as well. So that's why, yeah, it's quite a good trade.
Yeah, but I think we're also. I don't know if this is just human nature, or if this is something that you guys might agree with as well. It feels like we always think that something big is going to happen. You know, it's like everyone's always talking about something big is going to happen. There's going to be, but you know what? Like it's interesting because reading the book, The Foreturning, it's kind of like there are certain times in history where that thinking has been prevailing, you know, where certain generations at certain ages are thinking more about, you know, something big is going to happen. Everyone can feel that there's a big change and something happening. And then maybe, you know, in the 50s, I maybe that was not the case in a sense because then society was much more stable. You know, people were able to make a living. They were able to raise a family on one salary. They were able to, you know, get the house, get the car, and like they had a fairly stable. And I'm talking about the U.S., right? Like, because it's different in all over the world. But I do feel like we're in a time right now where it really does feel like something big is going to happen. And when something big is happening on a geopolitical scale or a financial scale, this is then what happens. This right here, because what happened here? Well, right here is the financial crisis, the great financial crisis of 2008. Something big did happen. The biggest financial crisis since the Depression, and arguably the biggest modern financial crisis that really, uh, set the standard for the financial markets we have today. So, you know what I'm saying? Like it feels like we're on the brink of something huge, and that's why I'm looking for these types of trades where I'm trying to position myself for that, because if you look at the forex market, I mean, you can just look at Euro USD, and we go out to the monthly. It's like in this area right here. This is where things actually no, it makes no sense. But you know what I mean? Maybe it makes sense.
Yeah, I know what you mean. I think you got to pick the right asset and the right pair. So I don't know if Aussie New Zealand is necessarily the right pair. During that period, like you're highlighting with the GFC, that was obviously where they both got hit. But then ultimately, we went through the commodity super cycle with China buying up everything, and New Zealand also benefited from that as well. So hence, Aussie New Zealand didn't actually. They were kind of in lockstep, but Aussie dollar a bit better, so we end up a bit higher. But at that time, I mean, the Australian dollar was above parity per the US dollar, right? We peaked at like 108 or 109 or something, right? And now you can see we're trading at what 65, 66 cents.
Yeah.
So that's very much one of those moment in time, perfect coalescence of aspects. We were not exposed to the banking and GFC type trading, that kind of stuff, because we have different rules, regulations. Our banks are very different here. And then on the back of that, at the same time, we also had China buying all of our stuff. And obviously, as well, Australia is very well respected as far as trust and being solid and in general as a financial sector. So we got a massive boon from that, but that's not going to last forever. So
Yeah, and also looking at, I think when we're looking at AUD and CD, I think it makes sense to look at the AUD USD and look at it from other versus other currencies as well, and AUD/USD is definitely trading at a low area for sure. And even with dollar weakness that we're seeing right now, we could definitely see more upside here. So
Yeah, as far as that, I definitely would have. I've been surprised just how long it's sustained that lower range. I would have expected ORD NZD to pop out a little bit sooner. Partly that was driven that during the inflationary period that we had globally, New Zealand, like the RBNZ, so Bank of New Zealand, jacked up rates. They were one of the first central banks to actually lift rates, right? And when they did, they jacked it up hard. They went to one of the highest rates of any economy. And you have to say, arguably, they went too far, because then you also had the housing dip, where housing actually came off 30% or so. You know, can you imagine housing coming off 30% in any other developed nation? You'd be like, okay, we're in serious trouble right now,
Yeah,
right?
with you.
Yeah. So that was purely due to the tightening that then eventually settled down, that kind of stuff. And so it was that rate differential, and then rolling on after that. This year in particular, we've come into Trump, right? And then, like I was saying before, Aussie dollar is going to be the express window as far as a liquid, hyper liquid asset to express that China view across the board. So, yeah.
yeah, that makes sense. Makes a lot of sense, guys. I need to work on a video that I work on. It needs to be done in the next hour, so I gotta jump off and work on that. I'll be listening in the background. I'll jump on if needed. Right.
Yeah, for sure. That's right, man.
All right. See you. Take care.
See you, brother. Ciao.
Have a good one. I promise I will make no more comments on CPI.
Of course you can. Of course.
I wanted to ask Jonatan, but he's with regards to his theory that something big is coming. You know, the
I'm here. You can ask me. I'm here.
Oh no, you were you were about to go and do something, so I was going to.
All right, okay, I'll leave. Goodbye.
You're funny. I think from a psychological standpoint, the anticipation of something big coming is usually a forerunner for the idea of longevity of the human race. So if you consider a negative impact, the magnitude of that negative impact is usually going to be blown up. You're going to blow it up a little bit larger for yourself because you're trying to forerun the idea that this thing, this cataclysmic event, is going to change everything. I must make sure that I'm ready for the most extreme reaction. And I think from a psychological point of view, I think a lot of people are like, they're built around that idea that I need to be prepared for the worst case scenario. And if I'm looking at the trend is indicating something that looks similar to an event that happened X amount of years ago that was a big event. Like in this case, 2008 market crash. You're seeing something similar on one asset. It's like, I'm not like saying it's fear mongering or anything like that, but it's that anticipation. I'm seeing a trend. I'm seeing something that happened back then. It looks similar to what's all busy happening now. You know, it looks as though we're having this turn, and it looks like it wants to start picking up. For a currency that was stuck in a range for the last, I don't know, 20, like let's say 18 years or whatever. And now you're having a breakout and you're like, oh, the last time this happened, it was a big thing. And I think it's important to realize that just because history happened, it doesn't mean that the future is going to be the same as what happened historically. It's like history is doomed to repeat itself, yes, obviously, but I don't think that it necessarily means that because something happened and this was the information, like let's say the signs that led to that thing being what it is, and then now you're seeing the same signs, that it's necessarily going to have the same outcome. So I think
it's it's history always it rhymes but doesn't repeat, right? So it's very
Yes.
similar but different. The other thing, you have this asymmetry, being that those sort of things tend to happen. I don't know, let's just use an arbitrary thing, roughly different periods of time. It's been longer or shorter. Let's say once every decade, right? So you got this asymmetry of 9 years on the forward train with 1 year, or even GFC, it was sort of 2.5 years total of drudgery, that kind of stuff. The recent, whether you call it COVID or other various pieces, we all of a sudden go into these very reactive, very fast, sharp drawdowns, and then very quickly recover. So
Yeah.
since then, every kind of adverse event, the time of recovery has contracted significantly. So you can say, and this is also what, in part, what actually precipitates why it happens, because everyone knows, and say you work for a company or a firm or whatever, and you know that you've got this kind of rough time set of 9 years on, 1 year off. Obviously, the incentive is to keep ramping it up within that time frame.
Yeah.
Take your money, get out, then it blows, and you just hope that you're not the last guy at the top, right?
Yeah. Yeah.
And that's kind of what everyone keeps repeating, which logically, though, does make sense.
Yeah, that's why I was like, it's that anticipation. You're anticipating something because history has shown that was the outcome in general. So it's a generalization followed by an expectancy, and then if the expectancy is not proven to be true, then you haven't lost. It's just like, okay, it's fine. I did get out when I got out because I expected the market to do a thing during, like you said, let's use this arbitrary same example, 10 years, 9 years up, 1 year down, and then recovery. If I'm in the market for 9 years buying, and then I'm like, I expect something to happen within this 10-year cycle now. This is now the 9th year. I'm going to get out now. You get out. Done. Yeah. Psychologically, you are, you're better off because you forerun the expectancy. The expectancy was on the 9th, at the end of the 9th year. This is theoretically what the outcome is going to be. I decide to step out before then. You have a look at the data as it's playing through. Okay, the 10th year did nothing. Nothing happened. Expectancy didn't become the reality. Yep. But you've already stepped out, so you're fine. You haven't lost anything, and you acted upon that expectancy as well.
So, yeah, and then that's always the game as well. That finding that sort of top period, because quite often the majority or half of the gains for the entire period are kind of made in that final 12 to 18 months.
Yeah.
Right. If we're talking about stocks as an example. And then so if you prematurely anticipate that, you've really kind of gotten crushed in between. You probably shorted or played some defensive game. And then people also go, okay, this is still going. They get out of that defense mode, FOMO back in, then get clipped, then it comes off, and now you're in a world of trouble, right? And that's that's markets. So
yeah, but I mean, it's that psychological reaction. It's the anticipation of something happening, and then you thinking you're going to forerun it because you expect the same outcome.
Yeah, yeah.
So, like, it's a fascinating topic in my mind, the psychology of trading, and specifically the psychology of what people go through without the basis of evidence.
Exactly.
It's like you convince yourself that something's going to happen because in the past X, Y, and Z happened, and it's showing the same, I don't know, like same formula, or it's showing the same movements now. It's no guarantee that it's going to happen whatsoever, and then you can convince yourself I should react based on.
Yeah.
So
yeah, it's to use the poker or that kind of analogy. It's like or a blackjack or something, like how many decks are in the shoe, whatever, and you've seen what cards have come out, but then it's like secretly behind there's a new deck that's been placed in, right? And you don't know, but you're still assuming that it's the same card count as what it is. And sometimes as
Instead of it
well,
being
the
5, now
new
it's
deck,
7.
and sometimes the new deck has entirely new cards that didn't exist before, and now you've got like a 14 and you've got like a 15 of clubs or whatever, and you're like,
Now you're no
well,
longer a positive number. Now you go from positive straight to negative, and you're like, but the count is positive. How are we on a negative now?
Yeah, because now all of a sudden you're playing a different game when you thought you're playing the original game, right? So,
It's based on known variables, but then all of a sudden the known variables change, and now it's just the unknown. So it's a game of incomplete information, and then sometimes you have a little bit more information than you were privy to previously, and sometimes you have less, and you have to try and make a decision based on what do you think might happen versus what is theoretically going to happen. It's a very interesting concept. It's something that I think a lot of people they try and bring that into every little aspect of trading at any point in time. And that's why I think a lot of people also tend to, when they do back testing, they do the hindsight trading as well. Oh, I should have done this at that point because look what it did. And it's just like, no,
you can't do that. You can be like, okay, I should have done this here, there, whatever.
Yeah. Because I took a trade based on X information at the time, and in hindsight, you have all of that information available. Whereas in the moment, you have fractions of it.
Yeah. You have to make the best decision with all current available information, and that's all you get. So
yeah,
it's like the F1 as well. Like mid-season, would anyone have bet that Max would be 2 points off the championship? Probably not, right? But then all of a sudden you get to the end of the championship, and that's how close it was, right? So, yeah.
Who didn't Piastri? Didn't he win last week?
No. So Max won last week. Piastri came second. Norris third. But then Norris coming third, he had to come fourth or lower. Sorry. And then Max would have won. So he just snuck in with that.
Jeez.
Yeah. So
I saw the stuff pop up on my Instagram post, on the Instagram. I was like, I could have sworn LJ was talking about Piastri the other day.
Yeah.
Now, obviously, I know very, very, very little about Formula One racing because it's just not one of my my focuses. But when the name stuck in my head because I remember you and Akram talk about it quite often. And I was like, okay, wait, hold on a second, what's going on?
Same with Dirk.
And then had a look there, it's like,
yeah,
he actually got some points now. What's going on? Anyway, it's like, it is what it is.
Very close, but he got stitched up this year. He got let down, put it that way. So, but yeah. Anyway, super cool. What were you saying with this? But if entry price on US30 is better than last crisis price, then you keep running instead of getting out. So do you mean in terms of overall pricing is higher than the last crisis? So therefore, markets in general are structurally, functioning or moving forward? Because there's another portion to that, which is just the overall growth of GDP, expansion of liquidity, capital, dollars out in the system like M2, where overall the entire goal of the economy in general is to expand, right? That's why often looking at stuff on a log scale versus raw price will sometimes give you a better picture for the actual velocity, right? So same perfect example would be Bitcoin, where if you look at it on price and you zoom out, it looks like it's gone just parabolic.
Yeah.
You put it onto a log scale and it's actually reasonably gradual.
Yeah.
Right. So. But yeah, if want to jump over to your chart for a sec.
Yeah.
just because I got to jump up for 10 seconds and then I'll be back.
No problem. I'm busy looking at NAS at the moment. I did take a trade earlier, which I cut short because of this reaction, and now it's decided to break through. Something went into my eye there for a second now, and now my eye is burning like crazy. Whoa. Oh, that is annoying. Wow. This was a trade that I took earlier. Decided to close it because of this box reaction that I have here, which is the top end of a swing point. So this is a base area of mine. Obviously, it needs to be a little bit higher. There we go. I think I accidentally bumped it. But this base area, price reacted out of... This was last week Friday. So we had this... misclick. We had this slow attempt to push lower during this area. Just hopping between the two, kind of no real structure apart from making slightly lower lows, slightly lower highs. And then eventually we had the break and then the push lower. And this was on news. Now, as prices pushing lower on the NAS or on NASDAQ, we have these areas where price attempts to break the downward trend. So buyers are trying to break this downward cycle, and everywhere where this happens, you have a potential area where price can come back to. So this is exactly what happened here. I call them my base areas, and this was a bearish base where price then eventually came into during just the New York session and then started to try and push lower yet again. Now, the thing is we did not actually create a new low on the day. We just semi-tested it, and then we closed out for Friday. Coming into Monday, which is this week now, my expectancy was that if we do eventually break this area of consolidation that we have over here, equal high, equal low kind of game, where there's no real direction, we started to eventually break through into one direction. And just took the buy with the intention of actually reaching the top portion of this base area and then seeing how it reacted within it. And then also the most recent reaction, which was this area over here. Price came into the midsection of this box and then started to print strong bearish candles. Now, none of these candles really broke structure, except for the low swing of this candle over here broke that last swing point, as well as this last swing point it equaled. Now, I closed at, as it was busy pushing a little bit lower, so I closed on that candle as well. The idea that I thought was going to happen is that because we had hit into this base area over here, that price slowed down in this little box here and was going to start to push lower, retest, and then continue lower. Now, if I just went on the information that I had at hand prior to closing the trade, just this section here, I would have been convinced that price was going to carry on pushing lower, because this is effectively pushes into the base area, pushes out of it, retests, and then shows a strong probability of pushing lower based on that candle, based on this candle alone. So I would have closed here regardless. I probably would have closed as this candle closed. But yeah, this is what I expected to happen. But instead what happened was it just did not want to carry on going lower. It decided to push higher and then consolidate yet again, attempt to break lower, does not break out of this base area and then starts pushing higher. Now broke above and closed above. So this is now a rally, a base candle, and then another rally with the intention of this portion over here being the low point of that rally. So we will most probably see price attempt to push higher. We are now at the very top end of this base, So the idea would be, if I have a look on the 4 hourly or on the hourly as an example, that I would want to see how much of the previous week's downward trend, which started basically over there, all the way to over here. Oh, did I not switch that on? I didn't. To over here. So we want to see how close we can get to either the 50% fill or the 0.618 fill as an example, which we're getting close to. It's not to say just because it's going to reach into this area that price is going to just magically start, reacting off of it. But this downward reaction that we had here last week Friday is a telling sign that there is the potential, if we do not break above this 50% to this golden zone, the 0.618 and 0.5, if we do not break above close and then continue, that it's most probably going to react and trying to push lower yet again.
I was going to say, I agree. I think that's the trajectory for indices overall. I don't think we're getting this further Santa rally. I think it's going to be very consolidatory, right?
Consolidative?
Yeah, with a slight down trickle, right?
Yeah, I'm in agreement there with you, LJ.
Yeah.
I do think.
Because both looking at the technical structure, like you were saying, it's sort of printing that. And then from the macro fundamental backdrop, like we've kind of had all the good news. What else is there to spur further risk taking at this point, right?
Yeah.
So I agree. I'm looking for entry into that area to potentially short from there.
Only NAS, or are you looking at other indices as well, like for argument's sake DAX or the US30?
Yeah, so primarily US indices, but I'm seeing it across the board on NASDAQ, S&P, and the Dow, right? I just don't see the further carry through to new highs. Funnily enough, I would have liked to see Bitcoin hold up a bit better recently to somehow give me more confidence in potential return to the all-time highs and potentially at least meeting them going into end of year. But we haven't seen that. So
No.
Bitcoin is still that strange barometer that weirdly now the wider, even institutional side is looking at as that barometer for risk. And that also comes into the element of the whole Japan trade with the carry trade, right? A lot of that money has gone to things like Bitcoin, because obviously you can borrow in yen at basically zero interest. Bitcoin being a non-interest bearing asset as well, you can park it there, and it's kind of a free trade, and you're just capturing the upside with leverage per the borrowing power that you get. Now, if that starts to unwind, then and your borrowing costs go way up. You got to unwind the carry into things like Bitcoin that is not producing something, especially if we're not printing new highs, that kind of stuff. The alpha capital increase is being outweighed by the interest payments
that you have to pay now on said loaned money, loaned capital.
And then
but
it starts to be a self-fulfilling thing.
Prophecy almost, yeah. So the more you go and, let's say, borrow with the intention of investing in crypto, and then crypto doesn't get the boom that you're expecting, isn't that just good for the banks overall?
Sorry, what was that? I was just seeing Dubiko's question because he seemed like he was waiting. Sorry, repeat that. What was that, Rich?
So you have a lot of people that are potentially going and making massive loans with the intention of buying Bitcoin because it's now at a premium. It's now much cheaper than what it was. The expectation is for it to go and pump up back to all-time highs. But you are sitting in this buy trade with crypto for a while, but as you said, you're still paying the interest. The bank is laughing. It's just like, we want you to borrow more money, try and invest in something, because what we're getting back is just all of that interest, and it's just in our interest to have you borrow more money.
And you got to recognize the primary instigators of that kind of a trade are more like bigger players. Obviously, they're going to have access to those types of
Massive
loans
capital.
and banking, that kind of stuff. But where we've gotten to at this point with crypto, with stuff like Bitcoin, retail is very much a part of it still. But in order to reach the new highs per the market cap, retail just doesn't have big enough pockets. So you're relying on those institutional players to jump into that and do that. And as well with the AI takeoff, obviously, crypto is very much based on mining data center stuff per the crypto sphere. And we've seen AI absolutely rip a lot of these guys doing that stuff have swapped from the crypto space, seeing that, okay, AI and that whole venture is taking off at 100, 200, 300, 400% in the next year. And they're all about those big gains, even at the high levels, right? Not just retail trying to get the 10Xs. So, they shift that capital to data centers and stuff, which draws it back out of crypto. So it's been a bit of a shuffle. So it's not necessarily like dead or anything, but it's just a reshuffle. And the thing is, with that reshuffle, we haven't seen NASDAQ, S&P, that kind of stuff continue to push on, especially given we did get the rate cut. We do have the liquidity coming through from the Fed, from the US government, all that kind of stuff. You should see some higher prints if there was full confidence.
Yeah,
but it seems those AI jitters, at least for now, are weighing on things. I don't think there's anything to worry about, but market's obviously very narrative driven. So
yeah. And it seems as though people, I'm saying people as a generalized term. So like it could be be massive industries, or it could be retail traders or whatever. It seems as though they've been scared off ever so slightly. So it's not like we're doing it, like you say, with full confidence. We're kind of like just dipping our toes on the water now, just to satisfy our curiosity almost.
Yeah, and then there's that whole cost of living pressure from retail side, to be honest, right? Like there's just not as much of abundant cash to throw around. People have to be more selective, more intentional with that aspect. So hence, everyone is looking to, if Trump gets this tariff rebate thing to give everyone a bunch of, $2,000 or whatever a pop, that could be beneficial. But even then, I think it'll be less of a,
I don't know,
hit maker than people expect. I think people will be holding that down and, that kind of thing. So, but yeah, Dubicor was asking about AJ for some time. Sorry, brother. So,
AJ,
I'll jump over to my chart. So
you're definitely more the Aussie.
Yeah, well, yeah. So it's the Aussie and the yen, right? So we'll start here looking at the 1 hour, right? You can see this trading cluster up here, right? We've broken below that. We're now testing the underside right here. Okay, so this on a 1 hourly by itself, you have to put into question that doesn't look too great, right? You'd have your next levels down here and then down through here. So this is roughly 150, and then 102.50, right? Now, if we go down to the 15-minute, it looks a bit better, right? This kind of looks like you could get a bit of a retrace up into here before then coming down, right? So back up to about 103.50. The other portion of that, though, is we can see, as we've been talking about today, the standard div channels, we're pressing right on that right now. And you can see we haven't been able to break beyond. That's very much providing resistance. That also coincides with these tops here, right? And so you got this like crossover between the two. Overall, I would say as far as the Aussie dollar component, yes, to the upside. The trouble is the yen component is going to be very strong going forward as far as pulling the entire complex lower. Now, dollar yen will be the primary taker of that. Like it will get hit much harder. The other crosses, whether it's Aussie yen, Euro yen, pound yen, will be hit in sympathy, but to a lesser degree. So, you might see dollar yen down 2%. The other crosses are down 1.2 or something like that %, right? But as far as a trade, I would not tend to stand in the way, even if you see a technical structure for some kind of play for this to go higher. I would still lean on the downside for the yen for the time being, especially like we have the Japanese central bank announcement this week, right, as well. And overall, we've got the unwind of the carry trade, the short-term, long-term Bank of Japan yields, right? So, or not Bank of Japan, but the Japanese bond market yields are way higher than the Bank of Japan current interest rate. And that eventually has to normalize. Like it's a force of nature. Everyone's paying this much, they have to come back into equilibrium. It's just, it's like a balance sheet thing. You're spending this much money, it's costing this much, eventually they have to come back because you don't have infinite money. So this is not a forecast or some kind of prediction. This is just basic math. Like 1 + 1 will never equal 3. It will always equal 2, type thing. So we've just been distorting that for a while, basically getting 1 + 1 equals like 2.5 for some time, and now it needs to come back in line, right? So I would not stand in the way of this. I would have a general tilt to the downside overall for all yen pairs. I would say there's probably a better yen pair as far as a short, that being either dollar yen. It's probably going to be easier to read as far as the macro and data picture from the US as well. That'll be more clear cut. That or else something like euro yen.
I'm having a look at euro yen as we speak. Yeah.
So, because euro yen has had quite a run, and you've got some of these structures up here, which we're testing right now. So you've got this clear level through here. That if you break further down through there, we get a firm close through here, then bang, you're right to the downside, right?
Yeah.
So some of these look a little bit better. I would say Aussie yen is a bit difficult because we do have Aussie dollar to the upside, yen to the downside, so they're going to be in constant pull with each other and kind of level out the overall trend. Because one goes down, the other one pulls it up, and it kind of just muddles around. So it's always better to have a double bubble where you've got yen going down, the other currency also having some pressure, or at least being neutral. Therefore, the dominating currency pulls. But right now, you'd have yen being strong to the downside.
Pretty much.
Technically, it means yen going up, right?
Yeah.
But you also have Aussie dollar going up. So they're opposites. There you go.
Yeah, I think you are 100% correct in what it is that you're seeing, because you can see it on all of the time frames. There was like this long extended upward move on all of them, like for the last 2 months on AUD, JPY, on CAD. You're getting all of this strong upward pushes all across. That's CAD. Same here. It's just pushing, but at some point it's going to start turning and start breaking these structures yet again, I think.
Yeah.
CHF as well. CHF is a little bit different. I don't know.
Yeah, I mean franc yen is always
but different.
very obscure, very strange pair.
I think with EJ we've had like larger sections of consolidation, where price just kind of like meanders in one area and then just breaks. So I agree with you. There's going to come a point where we're going to start breaking these lower swing points and then eventually start trudging our way lower, especially if you're seeing it across the board. You're seeing across the board on all of the yen pairs. The yen is doing well.
Yeah.
On all of the yen pairs. So at some point it's going to be the prevailing theme, is that it's going to carry on following that same idea that, okay, it's strengthening. When is it going to like really take over? Because right now you haven't really broken much structure, except that you've had this very, very nice sell-off from this morning, an attempt to push higher. We did sweep lower, or Thursday's low. I think that there's a potential for this to start pushing lower and then maybe potentially come and test down here. Or even
I think
here first.
Yeah, easily.
So let's say something like this to be tested first, and then if that fails, the last area where price attempted to push lower, somewhere there, or bar that a little bit lower, somewhere over here, as a potential. Yeah, if I have to just quickly say where I think price would go. First area, and that's purely because multiple reactions. I mean, we are technically in this area here right now.
So I would say even typical where we are right now, spot price on Aussie yen, 103.15. You'd run a short from there, stop at 103.40, 25 pips, right? And take profit down about 102.45. Right?
So in this little area over here.
Yeah. So you're about 70 points downside. Your upside is 25 pips. So it's like a sort of 2-to-1 right there. Because we seem to have hit that high wall and it's starting to pull back off already.
And I mean,
it's basically the underside of the higher trading range. Right?
Yeah, you can see at least there's some sort of structure that is being respected. So high, an attempt, push lower, making a lower low in relation to that one, lower high, pushes lower. You have this area over here that is being swept right now. Yes, we are consolidating technically. If you just look at how price is sitting over here, we're sitting in this little section here right now. If it doesn't want to push higher from here, if it doesn't break out and then continue to try and test previous base areas, in my opinion, like that, we're definitely going to... Oh, I keep misclicking this. I don't know why. I do think we're going to have this kind of movement be the prevailing move.
Yeah. And so I'd say, as ever, like with any of the yen pairs, you always got to keep an eye on dollar yen, because that is still the primary driver for the yen complex overall. So,
yeah, fair.
NASDAQ to the moon. I don't know. NASDAQ to a few, maybe 75 points higher and then down. I don't know if that's a moon, but
I don't know. Okay, so this is the 50% fib fill. I don't think we're going to disrespect this at all. I mean, this reaction from up over here was telling.
Mm-hmm.
And then overall, the attempts, I mean, like this section up over here just showed multiple tests. Establishment, test, 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 and every single time there was massive drops off followed. And this one that we had now is the deepest drop off from this point. So I don't think to the moon either. I mean, to be fair, this is like 500 points away from where we are right now, but still, this area up over here. But I don't think.
I mean, there's no impetus going into end of year to, you know.
Yeah, I do think this is the direction.
Yeah.
And if I go down to the 15, we have pushed into and just swept this 15-minute base.
Yeah, I mean, I will say the options pricing for today is about 25,192 coming to New York.
Oh, wow.
You can see
So,
we're coming up with that now, and we've had this massive draw lower, right, from spot gamma. So,
and I mean, this is New York Open now as well. So
that's what I mean. That's what draws price
yeah,
down to that level. So, because the options gamma.
where do you check the options gamma? Do you have a website that you go and have a look at it, or is it a
Yes,
price that you pay for?
So this guy, optionscharts.io, is what I look at. So the main website, when you go to it, looks like this. And you scroll down here. This is primarily for stocks and indices. So you won't find FX options data through here, but you will find indices and stocks. So we go index, we go over here, we go to NASDAQ, right? Now from here, you go to option charts, probability distribution.
Options chart. Okay.
Yeah, and this gives you a nice outlook through here. So it has changed. It's now 25 through 07. So the options have
Probability distribution.
shuffled around, yeah, a couple of dollars. So that's for the 0 DTE, so 0 days to expiry. So today's expiry, which nowadays, those expiries are some of the most heavily traded on NASDAQ, S&P, and everything. So that tends to move the market. Same with stocks as well. Very active, massive flows coming through. So you got that spot gamma coming into the expiration that pulls price to that, right? So that's typically the levels you look for price to get drawn to, and this is 25 through 07 as we're coming into New York Open. Now we go to the NASDAQ and we go down. Let's go down to the 5-minute. Let's look here. What was this price right now? 25305.
And what did yours say? 307. Yeah.
Yeah. So there you go.
Okay.
Coming.
Mine is a
Yeah.
little bit different than yours. Mine is showing 25,328.
Yeah, it'll be changing in real time because of the buying and selling, and yeah.
I just caught a mosquito.
So earlier on about London Open, it was about 25192. But yeah, so you keep an eye on and refresh and that kind of stuff, and you'll see that changing. So obviously, either way, it was still to the downside, and then once we come up right up to New York, check then. That's the current exposure, and there you go. So
I've been looking at trading NAS a little bit more. I've gotten really, really good trades as New York opens up, and like maybe half an hour or so afterwards, because I trade the rally-based rallies and the drop-based drops. So obviously, I want directional movements. I want it to either sell off like crazy or to buy up like crazy. I don't like this meandering in the middle and then, a little bit up, a little bit down, a little bit up. So whenever there is an opportunity for price to start showing, listen, I'm going to go in one direction, not the band. So when New York opens up, that's generally where you see it. And now I have never looked at this options pricing. Actually, I'm lying to you. I have. Pooley showed it to me once, but I had no clue what was going on there.
I was going to say, Pooley has gotten onto it very heavily, and he loves it because he's like, LJ, thank you so much for this. For me, it's had literally 90% strike rate. Works like you could run your entire trading profile off this, off the New York Open, have that 1 or 2 trades, and then that's it, and be done. It's an entire strategy in itself. So
the last I would say week and a half, the majority of my winning trades have come from NAS during the New York session.
Yeah. Yeah.
Majority.
And it's definitely good because you get that immediate burst of, orders coming into market, instant activity, bang, done. Right, you got to be careful of news or some kind of
Fair.
headline stuff with AI stocks, that kind of thing, or earnings or whatever. But so long as you're conscious of that, you'll be on the right side. So
yeah. So in general, what I wait for is I wait for it to choose a direction, and then prove that it wants to continue going in that direction. And what I mean by that is if you have an opportunity for price to try and break the downward trend as an example. So last week, Friday, we had the downtrend, which was established as New York opened up. And then when there's an attempt to try and break that downward pressure, so one or two buying candles, but they don't come nearly close to, let's say, the opening range or the break lower, or it just kind of like taps into it ever so slightly and then it just gets a follow-up selling candle. That is the perfect entry to me. Just absolutely perfect. Yep. Get in, go for a 1 to 2. The stop loss doesn't matter because it's going to get hit. The take profit is going to get hit. From my back testing that I've done, if I do a 1 to 2 with, let's say, 80 points take profit versus a 40-point stop loss, with the amount of volume that pops in, whenever you do have that attempt to try and push price higher and it fails, price is not going to come back to this point for hours. And I can just enter and leave it. I had, like I said, in the past week and a half, I think I've had maybe 5 or 6 trades that I've taken on NAS, and I think only one of them didn't immediately go to take profit. It kind of like just played around a little bit and then I cut it short.
Yeah.
But overall, they're all going very, very strongly in one direction. But the thing is, how long will this last?
A long time. I mean, this is exactly what all the quants run their data off, options and everything, right? And again, it's all statistics, math, order flow, positioning. It comes from exchanges and everything, right? So it's one of the that's sort of why they run stuff there, is because it's actually firm pricing data. It's not, it's always going to be there, right? This is where people are positioning or are not positioning, and then obviously as far as they between each other trying to arbitrage price to the best fit does decrease over time. But I mean, that's been going on for a long time now. This is not
this is not new.
This is not a new game. This is a decade plus old, right? So
back in my day.
yeah so it's probably one of the only long-standing things that will exist that you can sort of run. And that's the other thing. You try and run it off the coattails of where they are positioning as a retail trader and interpret where the bulk of institutions are going, and then just find your entry point as like the sucker fish on the whale or the shark, right?
Those little feeder fish sitting around the sharks, just eating up the scraps and whatnot. It's like, okay, there's a shark going over to that whale over there. Follow the shark.
Yeah.
Don't get in the shark's way, though.
Yeah. And so Dirk and I are trying to build a modeling thing for this together at the moment. So as well for FX. The main trouble is actually getting the data, which is very expensive if you want.
Was that what I was referring to earlier, like $27,000 a year, kind of like just for the information? That is ridiculous.
And then you got to work out how to package it and actually make it useful, right? You just get the data, So, yeah.
It's like somebody just like dropping, I don't know, you know a lot about solicitation and whatnot, obviously, because of your family members and stuff like that. So, whenever they have to kind of like, they get a new case, and then it's like, here's all of the information for the last 20 years of this company. We need you to go through this to determine if they have committed fraud in the last 6 months. It's just like, okay, there you go. There's the data. Have fun.
Yeah.
You have to go scour through all of that information, then realize, this sucks.
Yeah,
So, yeah.
exactly. And yeah, that's, it's 27K US. It's like, okay, that's it's pricey.
Pretty penny, mate.
Yeah.
That is a pretty penny.
So you got to be sure that you can actually produce something out of that, obviously. So, but yeah. Typical was saying, on the option side, what is the point of selling a put over the money? Example, selling 220 put on Oracle as the current price is around 188. So selling a put. So a put would be a sell. So you're pretty much saying that in that case, you're saying that Oracle will go above. So it's like essentially you're buying the stock, right? So a put is a sell. So you're selling. So if you had a 220 put, that would be a sell from 220. Now, if you're buying the put, right, essentially you're saying no to anyone trying to sell from 220, that you believe price will go beyond that, right? And then it depends on what time frame you're looking at, because then you get into all the Greeks. You get, your, theta, vega, delta, this, that, the whole,
the whole Greek
band.
alphabet.
Yeah, the whole band, right? And then why or why not is often that people run cross-current strategies with the options, where you might also be on the other side buying or selling the calls as well. And then depending on the option Greeks, like we were saying, there might be sometimes mispricing within that. And then it depends on your time frame of the trade. You could also trade multiple options within a given total set of a time frame of like 12 months. But you might have some laid out for the next 3 months, 6 months. You could also have an actual stock position where you're long, but then you're short from the option side to hedge out and cover certain things. And you can get very sophisticated where you have, 5, 6, 7, 8 different trades essentially on the same trading idea, but all with different time sets within a larger band. And then you're moving in and out and whatever. And then you can also get to hedging it against an entirely different company, which is similarly positioned, but has a different profile, but is still in, say, the tech sector and have some kind of AI exposure. And then that would be like a typical hedge fund trade where you go long and short one company because you think one company is overvalued, one is undervalued, but then they cover each other. Yeah, it's levels of depth of that kind of stuff.
I am waiting for the NAS to show some sort of attempt to break this downward push and then fail at that, and then I'm probably going to take a short. This is not an actual entry point. I've just put it here so that I can quickly drop it down.
Like arbitrary.
Yeah, it's just like it's just a visual thing. Going down on the 1 minute. This is kind of like what I'm looking for. I want to see something like this. So push lower, breaking this like sideways action, that not really sideways, but like this very slowed movement, an attempt to break the downward cycle, and then a failure. And then I would want to enter somewhere over here as an example. So that is what I'm looking for. So this could have been a trade. I don't trade the 1 minute, but this would be what it is that I'm looking for. In general, I don't want to see as many attempts to push the price higher. In general, I want to see something more in line of this, where it loses its attempt to push price higher a lot quicker. And then the follow-up candle, this one, would be an entry point, but on a higher time frame. I don't do it on the 1 minute.
Yeah.
The 1 minute is scary, mate.
So we still have high lows from the Asia low, right?
Yeah.
Yeah. So you wouldn't want to jump on that
No.
just yet.
No. That's
at
why I
all.
say I want to wait for it to first push back a little bit and then decide, okay, I am failing to push higher. Unless we have significant areas where we've had, let's say, multiple reactions off of, and it reacts off of that area. So there's one, we've got ones from last week Friday over here where we've had triple reaction. Now, obviously, if I can get in on a trade and then push it into this area, somewhere where it is right now, or even lower, not lower, I mean higher, like somewhere over there as an example, then I'm still within the let's call it a low time frame or recent area of interest. Because obviously you want the way that I see it is like I want to see price react strongly off of an area, and if it doesn't react strongly off of that area, what's the chance of it continuing? So if it's going to hop off of this area, it just kind of like touches it, attempts to go higher and then starts pushing lower, then this to me is not a significant area.
Yeah.
I want to see it react like strongly and say, you know what, I don't want to go lower. I really want to push higher. So
Yeah.
now we've got the base, the very, very first base candle. Now I want to see how this candle is going to react. And then I will consider getting in bar how this candle closes. If it closes very strongly, then I'll just get in, have my stops just above that swing point, and then aim for a 1 to 2. And then it doesn't really matter, because this reaction is not from here. We've got, what, 4 minutes before this one closes. So I'll just wait. Be patient. But I think the lows here is more in line with what is going to be tested first.
Yeah, I
Because
think
this to me is kind of like consolidation.
Yeah, I think we're likely to see the lows from here. Like I was saying, there's a bunch of other option strikes below, and we just had some of those 0 DTE ones coming a bit higher as price have moved up, so that draws that, but there's other strikes lower. So overall, the picture is definitely to the downside. But you just got to see that, say up into those moving averages, which is roughly the sort of bottoms of the higher, that higher trading range, near-term range, if you want to call it that. See that tested potentially in a fall off, that or else we don't even get there and we just crack the lows, and then you enter on the break of the Asia lows. So
yeah, because the thing is, for me, it's about momentum. It's how much momentum is there. If there's zero momentum trying to push it up when it has the ability to try and push it up and it doesn't.
Yeah, when the price of any asset has the every reason for it to move up, like often the same way that you get when there's a macro event or fundamental news or a central bank announcement, and you've got every reason to push higher and it should be bullish, but you can only reach a certain maximum and it starts coming off. That's a very devilish signal that price is capped out. All the buys are in. There's no one left. Anyone pushed down. So
yeah, and I think the thing is also it's just like getting in on it too late as well.
Yeah. You don't want because then you expose yourself to that pullback. So I was going to say with this difficult, this is where you start to get into more complex stuff with options, of like being an options writer versus a taker, etc. Just let me adjust some of my trades right now. Okay, that's fine.
Are you in any trades at the moment?
Euro dollar, and I was just looking to take euro dollar here.
Are you looking at a sell or a buy?
No, I was in a buy from before. So
you were in a buy before.
yeah, so I was in that buy before, TP there, bought again in here, but this is now seeming to top out by the tops. So I was looking for a further run, but I might just be conservative. I just took it out there at the same top. So it may still run on, but I'm gonna hold off on that. 1 second. Got that. Okay, cool. But yeah, so difficult. Yeah, this is where you get into options writing versus taking, and you get into the complex stuff, and it gets difficult because obviously you can buy and sell options, but you can buy and sell the buy and sell, right? So you have like a second derivative of just a base buy or sell, right? And then this is where you get into complexities of everything. So you'd have to go into a longer, multi-hour explanation of this stuff to explain it properly. But in general, though, anytime myself or Dirk in particular, like he used to do a bunch of this as well, especially when he was working for the family office, and he still does today, just the same. He has a very good understanding of options and the like as well. So, post it to us every time. It is. This is where options is very very difficult because you get into like more complex math where you actually have to fully apply math to really do it properly. And like we were saying before, with all the Greeks and how they're interchanging in real time, as well as then you're looking at the expiry for whatever options pricing you're looking at. And then hence, depending on the duration of the expiry, they're also trying to take into account future information, which is then in real time pricing that flux of fundamental and macro data in real time, as well as the actual like trading volume, which tends to be in alignment with that. But it's kind of like the same way if you just look at the probability for the next Fed rate cut, how that shifts around, right? Same thing, options or flux all the time, both on that prospect of potential of an outcome per future data that could move the price, plus real-time pricing right now of where the actual spot price is jumping around.
I'm in this NASDAQ.
Yeah. Euro dollar did keep on, to be fair, but that's fine. I'm happy with the TP. You're in the NASDAQ. Yeah, we're just cracking the bottoms now, hey. So,
But I don't really mind if this one doesn't work out, obviously, but it's established area, drop, base, and then a continuation drop. Obviously, I entered too late, but the point would have been it at the close of that one, and then looking for a push lower. So this is on my stream account, so it's my 5K account. I'm almost at 1% up on this account, so I'm taking it very slowly.
nice. That's good. I would say if you're in Euro Aussie and Euro Pound buys, at least for Euro Aussie, that should be pretty good for today because Aussie is getting pulled down by indices coming off right now. So S&P, NASDAQ are coming off. Aussie's getting that risk off drawdown as well.
148.22.
Yeah, for sure. I can definitely see if with Dirk we could do some kind of thing like that, like an introduction to some of that, how to use it with some of the bits and pieces I pull up, as well as like a general understanding of their function and role in markets, why they're important, that kind of stuff. Definitely. But yeah, I'd love to like get into a big thing, but that's the trouble. It's not as simple as 2, 5, even 15-minute explanation. Yeah, unfortunately, they're a bit more in depth. Yeah.
Yeah. So we have one more minute before it is the end of the stream. So guys, if you haven't already, please drop us a like, drop us a subscribe. We would love to hit the 92K subscription mark. That would be amazing. We did have the 90K giveaway, so I don't know. I don't know what's going to happen at 92, but I can tell you what's going to happen at 100K. It's going to be a massive thing. So yeah, if you guys would be so, we would be eternally grateful for a like and a subscribe and a share. Share it with anybody that you think might find trading interesting, or just the concepts that we're trying to teach, find it interesting. Share it to them as well. How often do we stream? We stream every single day, Monday through to Thursday. It is like a 5 to 6 hour day of streaming. Next week, Monday, we have a very special event. It's a whole day event, so you won't see the likes of myself and some of the other guys, but you'll see most of people like Mickey, you'll see Sol and so on, everybody that's going to
I'll be around. I'll be there.
I saw you're going to be a part of that little section as well.
So it's prep for 2026.
Yes.
On the Monday next week. So,
and you will get information from like industry leaders, like top analysts, like economic analysts as well, not just technical analysts. So go and register. I think the link is in the description box below. Just go and register for that one. So yeah, and I think anything else from you, LJ, before we switch everything off?
I think that's all. But yeah, Monday to Thursday here every day. Then there are other portions in the Discord as well, of which I will be, I think, in 45 minutes from now with Akram. So I think we're covering Victor's session.
Victor's slot.
So yeah.
All right.
But, no, I think that's all for today. So thank you, guys.
Thank you very much, everybody. See you all tomorrow morning for Tuesday trading.
Yeah.
All right. Cheers, everybody.